Very good evening, ladies and gentlemen. On behalf of Southern India Regional Council and on behalf of Indirect Taxes Committee of SARCF-ICI, I extend a very, very warm welcome to each and every one of you here for a 4-hour session on Gst'Practice on the latest developments and updates on goods and services tax. Today we have 3 eminent personalities and I'll also join these elite luminaries of the professionals. We have with us very senior professional with more than 3.5 decades of experience, CA V.V. Sampath Kumar Ji. Friends, kindly join your hands welcoming Mr. Sampath Kumar. We have yet another senior professional with more than 2.5 decades of expertise on indirect taxes, C.A.R. Subramaniam. Friends, kindly join your hands for Mr. Subramaniam. And young, energetic by look and also in terms of years of expertise on indirect taxes with a lengthy experience, we have Mr. V. Srinivasan, C.A. V. Srinivasan. Friends, join your hands for all the 3 personalities. Before I introduce them formally and also the topic of the day, let me request all of you to kindly rise for IC motto. Thank you. May I request a few members who are occupying the last few rows, you can come and occupy the most coveted front rows with blue color round table. It's exclusively for you only. We have very special guest also from Nagarkoil. Please welcome. Well, today's topic, now before I invite the session chairman, C.A. V.V. Sampath Kumar Ji, to give a overview, let me introduce all the 3 professionals on the stage here. To start with C.A. V. Srinivasan. He is a fellow member of our institute and exclusively focuses on litigation, advisory and compliance services and indirect taxes on GST law and S12 service tax and T and VAT. He is actively involved in appeals before the Honorable Customs, Excise and Service Tax Appellate Tribunal and also before the Commissioner of Central Excise Appeals, as well as adjudication proceedings relating to the erstwhile service tax and T and VAT laws. He is actively involved in advising manufacturers, traders, service providers across various sectors, including logistics, real estate, automobile, automotive, ancillary industries, engineering, textiles, and IT under the GST law. He has worked with leading companies like ICRA Limited before coming to practice, which is a credit rating agency, and also with ICICI Bank and BSR & Co. While working with ICRA, he was also a member of the Basel II and SME rating committee. So that's a very, very brief and an extensive uh, profile with a wide experience of CAV Srinivasan FCA. Friends, join your hands for Mr. Srinivasan. He is, today he will take us through one of the most, the present season topic, the input tax credit reversal, reclaim, and on the blocked input tax credit, maybe 90% or even 99% of the assessees, to what extent they have reversed it, it's a big question mark. So that is one area where he will take us through, and the solution, we have the cutoff line as the September 2018 return, which could be filed in the month of October. So what is the best solution that is possible, if at all the ITC credit is not claimed, and if reversal is not done, all these aspects he will cover. And next we have Mr. R. Subramaniam. Today, especially last month, after the GST council meeting, they have come out with a simplified returns and return formats. They have come out with a note on simplified return and return formats, which extensively they have collected views from length and breadth of the country, and a collective views are actually incorporated in the simplified, they call it as simplified returns and return formats. What was part of the return in the form of an amendment, GSTR 1 doesn't have an amendment para, but the 3B has an amendment para. But here they have come out with a separate form called GSTR A, so an amendment form, so which is actually a very welcome sign, because that's equivalent to a revision return. So not only that, so many other aspects they have brought in the form of simplification. But even though it is simplification, it looks like rationalizing the existing format and understanding the plus and minuses and making it to some extent soothing and comfortable by bringing in the new format. So Mr. R. Subramaniam, he will take us through this. He is a member of our institute and also member of Institute of Cost Accountants with over 2 decades of in-depth experience in direct and indirect taxes. He is the founder and senior partner of Subramaniam and Associates with a full-fledged and full-equipped office which includes a dedicated team of direct and indirect tax professionals. His clients include MNCs, listed and unlisted companies. He specializes in direct and indirect taxes, and widely he has presented lectures across length and breadth of Tamil Nadu, southern region, and versatile speaker, especially both in English and Tamil. And I myself, along with Mr. Subramaniam, we have shared many forums, and also in Doordarshan also, where he was very fluent in bringing out the technical points in goods and service tax in a very simple layman language in Tamil. He is also a keen participant in philanthropic and charitable activities and a member of several charitable and welfare organizations. With this brief, may I introduce Mr. R. Subramaniam once again to this august gathering. Friends, let us first hear from Mr. Sampath Kumarji. He is always with us, a mentor and guiding light. Especially, I must make a point here. Exactly 4 years back, there was a certificate course on indirect taxes. Today, it is a certificate course on GST. And that particular program, 72 participants. So it was a very nice experience working along with Mr. Sampath Kumar, because we jointly coordinated that particular certificate course, and today that 72 group family of chartered accountants, we are able to see almost more than 40 of them have taken indirect tax practice, and 12 of them have been a speaker. That is something very phenomenal. We never expected that. And all the 12 speakers are doing extremely well. So all are young speakers. And that is something which I always cherish with Mr. Sampath Kumar whenever we work together. And recently the advanced workshop on GST, batch 1, it was a phenomenal success. We had 81 participants, representation from all parts of southern region. And we are in the process of announcing the second batch of advanced workshop on GST. This is actually a workshop conducted by the Indirect Tax Committee of ICI, and at the SARC level, the Indirect Tax Committee, SARC, will be hosting that program. The second batch we will be hosting it in, we are planning to host in GRT Grant, so which will be a 4-day program on August 18th, 19th, 25th and 26th. It's a Saturday and Sunday program, full day program. So we'll start from 9 a.m. We'll go up to 5:30. And I have just now got confirmation from Mr. Sampathji that the Chief Commissioner of the GST, he will be there again, because he was there for the first batch to inaugurate the program, Sri C.P. Rao. He will be here for the second batch also. So Mr. Sampath Kumar is our member for more than 3 decades. He is also an ISA qualified member. He specializes in erstwhile T in GST, then VAT, now on GST. And most popular speaker among length and breadth of the southern region, and especially a versatile speaker on any part of any nook and corner of the indirect taxes. We are very fortunate to have him today as the session chairman. So over to Mr. Sampath Kumar for his opening remarks, and later to Mr. Srinivasan for the session on the input tax credit.
Thank you, Mr. Raju. Good evening, friends. This particular Gst'Practice session is going on for a couple of months. The objective of this is not to talk about the basics, because 1 year is over and we professionals have attended many such programs. The moment somebody says GST program, I know everything, why should I go at it? That's not the point. What are the relevant practical issues faced while carrying out the practice? These are practical relevant topics. As rightly pointed by Raju, there are 3 speakers. My role has been taken over by Raju and he is nicely, cogently present what I am supposed to do. And today the topic in GST, as you know, registration, returns and refunds. These are all 3 R's. Registration, returns and refunds. These are very sensitive areas among other things. Returns takes ITC also or reversal also. But time and again many questions are asked with respect to how to correct this return, what are the implications, how my refund is blocked, why it is not coming, what are eligible debates, because new law. Any number of learning, any number of reading the same provisions for me, my understanding level is such that when I read for the second time, different understanding comes. And a practical session of this nature, when problems are shared, same provision, different set of facts, different dimension comes. That is the purpose and the objective of this type of sharing, knowledge sharing. And I don't want to take more time. And I heard Srinivasan many times, I heard Raju also, I heard Subramaniam also. In one of the sessions in Subramaniam's job work alone, job work is a very, very small segment of the GST law, 4 sections only. But then the examples with which he was sharing, it was a great success a month or so back, which Raju will vouch, and I heard Srinivasan also. Very, very minute analytical aspects of the provision, which for me, I learned many things from Srinivasan's speeches. Over to Srinivasan to hear. Thank you very much.
Good evening, everybody. This is actually quite a critical topic, input tax credit reversal. I'm sure we have come across several instances where we have discussed at length about input tax credit, but about reversal, it's usually a little bit of an untouched topic. So we thought, we'll actually handle this session focusing primarily on input tax credit reversal, so that the GST finalization time is also quite nearing, and then GST audit is also in the offing. So it's time we get to know the reversal in depth. Today we'll cover these topics. Primarily we'll discuss about blocked credits, restricted credits. We'll also touch upon practical examples, and then we'll also briefly touch upon proposed amendments, because we still don't know how distant those amendments are. It has to be passed by the center and also by all the states, 31 legislatures. So we'll briefly touch upon the proposed amendments. We'll also touch upon computation of ITC reversal for inputs, input services, and also for capital goods. We all know these basic definitions. Input means any goods other than capital goods. This is the sole point which I want to highlight here, because as we move on into the discussion, there is a separate treatment for certain capital goods. There is a separate treatment for inputs and input services. So just to get that clarity, I just want to highlight that inputs means any goods other than capital goods. And we all know capital goods, the definition has been changed in the GST law. Capital goods means goods value of which has been capitalized. A very simple definition, but we'll have to wait and watch what unfolds. Input tax, we all know this definition again. Input tax means CGST, SGST, UTGST, IGST. Similarly, IGST charged on import and GST payable and reverse charge is also included, but it excludes tax paid under compensation levy. We all discuss extensively about CGST, SGST, UTGST, IGST, but there is also a fifth child in the family called compensation cess. Is it possible to take input tax credit of compensation cess? Any views from the audience? Is it possible to take ITC, input tax credit of compensation cess? Any views? Yes, no? Sorry, sir?
It's a levy.
Okay.
Can't take.
Okay. Any other answer, sir? Anybody else? I also heard another person say no. Okay. Basically, under the GST Compensation Cess Act, I think section 8, if I'm not wrong, subsection 2, that's my vague remembrance, you are eligible to take credit of compensation cess. Obviously, use it only for payment of compensation cess. You can take ITC, because this fifth child is normally an untouched child. I don't know why, but somehow that is how the treatment has been. This is a basic slide. We'll move on to the core part. Now, what are blocked credits? There are certain credits which you cannot avail on the basis of nature of inputs or input services. I'm sure we have discussed about this in several forums, but today we'll also discuss with a few practical examples and see what this means. ITC is not available in respect of motor vehicles and conveyances. Motor vehicles and other conveyances. Now, straight block. Motor vehicles excluded, other conveyances excluded. What is meant by motor vehicle? As per Motor Vehicles Act. Motor vehicle means any mechanically propelled vehicle adapted for use on roads. It includes a chassis on which a body has not been fit. It includes a trailer, but it excludes a vehicle which is adapted for use within a specified premises or factory. So please note, it is primarily covering vehicles, mechanically propelled vehicles which are adapted for use on roads. I'm just emphasizing this point because when we get a little deeper into the discussion, we may have to bring this again. And what are other conveyances? Conveyance, as per the definition of GST law, means vessel aircraft and vehicle. So we'll touch upon this again. But there are a few exceptions on, under which you can still avail ITC. One, if you do further taxable supply, meaning you are a vehicle dealer, you buy cars, you sell cars, obviously you are eligible to take credit. You are also engaged in passenger transportation. Yes, taxable supply of passenger transportation, yes, you can do so. Third point is okay, restricted, very, very limited scope. If somebody is, engaged in running a driving school, yes, they are eligible. Fourth is all pervasive transportation of goods. So if you have a motor vehicle which is engaged in transportation of goods, ITC is undoubtedly available. Very popular question, extremely popular question, highly debated. Is input tax credit available on vehicle insurance, repairs and maintenance? Anybody giving a contrary view? No. Okay, people who said yes, can somebody elaborate on why vehicle insurance, repairs and maintenance are eligible? Just add your thoughts, sir.
For the purpose of the business.
Okay, okay. Any other viewpoints?
There is no exclusion in the block credit.
Okay,
Specifically, there is no exclusion under section 17.
okay. Any other viewpoints, sir? Sir, vehicle insurance, repairs and maintenance squarely ineligible. The reason is 17.5. If you read the section, it says ITC is not eligible in respect of motor vehicles and conveyances. It just says motor vehicles and conveyances. It does not say supply. It does not use the word taxable supply. That is the only clause which starts on a blunt note, extremely blunt note. ITC is not eligible in respect of motor vehicles and other conveyances. Of course, with exceptions. It does not use the word taxable. If you go to the next few clauses, it uses the word taxable. Supply of so and so, but this clause does not use so. The second viewpoint is, when the car itself is ineligible for ITC, where is the question of eligibility of ITC for insurance, repairs and maintenance? It is not. I will also corroborate this with another viewpoint, which I will come up maybe in about 2-3 minutes.
My expenditure is to preserve that asset, which is needed for the business.
Perfectly, sir. You are very right. But the question is, when the motor vehicle itself has been excluded.
But one is a capital, this is a revenue expenses.
Fine, sir. No problem at all. Question is, sir, motor vehicle illanu vehicle insurance, repairs and maintenance varthukku scope e kadiyadu, sir.
Insurance of lorries used for the transportation of goods?
Sir, it is allowed, sir. That is allowed. So all I want to say is, on the left side, if you fall on the left side, squarely it is not eligible. If you fall on the right side, you are eligible. So if you are, let's say, paying insurance on buses which are used for transport of passengers, yes, you are eligible. But apparently for car, smaller vehicles, there is no way input tax credit can be availed.
The section uses the word in respect of, right?
Yes.
So probably it will be in respect of means it's only it uses the word.
Not necessarily. Actually, it does not use the word supply of. That is what I am trying to highlight. It just says in respect of motor vehicles and other conveyances. See, if the lawmaker wanted to curtail ITC only on supply, he could have simply just said ITC shall not be eligible in respect of supply of motor vehicles and other conveyances. It starts on a very blunt note. If you observe, it starts on an extremely blunt note.
Because generally in the Act we use two words, in respect of and in relation to. So here you can also see in the GST there are many places they are using the word in relation to. So here since they have used in respect of, my view is it is only with respect to that particular asset, not any expenditure or any other expenditure on that particular asset, like insurance and. also settled in many Supreme Court judgment where they have used the word in respect of. It should be used only. And if you look at the Oxford Dictionary also, it uses the word.
I fully stand by what you say, but what is the intention of the lawmaker? See, in some case, a judge can actually analyze and understand that in relation to what is the meaning of in relation to or in respect of. But what is the intent of the lawmaker? In another 3-4 minutes, maybe the intent of the lawmaker will be crystal clear. I'll just bring that out. Sir, is ITC eligible on purchase of delivery van by trader? Somebody, let's say, buys a van and then uses it for transport of goods. Is it eligible, sir? Yes. By a courier agency, they are moving letters. Is it still eligible? Yes. They are also goods. Goods means all kinds of movable property. Third one, little sticky. Is ITC eligible on purchase of delivery van by an outdoor caterer? Please remember, sir, outdoor caterer, whatever service is done by the outdoor caterer, that is a service. Outdoor caterer can only do service. That is very clearly etched in the Schedule 2 of CGST Act. Now my question is, somebody uses the van for moving all food items, let's say from Ashok Nagar to Vadapalani. Is ITC eligible, sir?
Yes.
What is the reason?
His goods is only
Service is taxable.
Sorry, sir?
his goods. His only food is his good. Then it is eligible to be eligible.
But he is engaged in a service, right, sir?
The service is only after giving including the material he is doing service.
Brilliant answer. Brilliant answer. What he does is basically he is engaged in movement, transport of goods. So the food is nothing but goods. What he delivers is a service. So he transports or moves goods, but he delivers a service. So therefore, even if in the case of an outdoor caterer, ITC is pretty much eligible.
Excuse me, this purchase of delivery van by trader, where exactly it falls here, on the right side?
For transportation of goods.
Occurrence of business.
No, transportation of goods, he means only the, according to me, it is only this one, the transporter.
Why should we read so restrictingly into that?
The reason is, for the supply of taxable supply, that is what he says. He is using this particular input for this further supply of taxable go out.
Okay, sir.
So in which case, it will squarely go out.
Okay, sir. I just I just want to highlight the first, second, and third bullet point uses the word taxable. It's in italics. Further taxable supply of passenger transportation, taxable supply of training. But the fourth bullet point fails to use the word taxable. It simply just uses the word transportation of goods. It does not use the word taxable transportation. Had the word taxable been there, I'll stand by your view, sir. But it is merely using the word transportation of goods. வெறும்னா லாரி ஓட்டுன்னு போறார், அது அவருக்காகவும் இருக்கலாம், வேற யாருக்காகவும் இருக்கலாம். So ITC is eligible in that case. Very popular question again. Suppose a company buys a bus and uses it for transport of its own employees. Infosys buys a bus, uses it for transporting its own employees. There are two scenarios. Charges could be recovered, charges may not be recovered. If the charges are recovered, let's take the first situation. If the charges are recovered, is ITC eligible, sir? What is the reason?
He is also a passenger.
Okay. Any contrary views?
No, it should be identified as separate supply.
Okay.
Within the company, if he is in, suppose IT, if he is IT company, the supply of transport for his employee, he should go for a separate registration. Then only the question of ITC comes.
Okay. Any contrary views, sir? Any other contrary views? Schedule 1 of CGST Act squarely says any supply by employer to employee in the course or furtherance of business, even if it is without consideration, is squarely taxable. Okay, here you are collecting, so which means all the more collect pannalenale supply ntanga sir government la, you are collecting, undoubtedly it is a supply, you are engaged in a taxable supply. So Infosys is engaged in a taxable supply of recovering charges for transporting its employees squarely. But I will tell you where there could be a hitch. The officer's mind is very, very sharp. If he wants to drag you down, he'll drag you down any number of miles down the gorge. You see the words, I've put this in italics, second bullet point, taxable supply of passenger transportation. You know what the officer will say? Yes, you are transporting, you are engaged in taxable supply of employee transportation, not passenger transportation. That will be the limited view which the officer will take. I am just throwing a wind of warning to you that definitely this sort of an interpretation is highly feasible, officer will take. But all said and done, the minute you collect money, obviously indirectly they become passengers. So restricting such kind of credit is not the intent of the law also. Therefore, you are eligible. Now, suppose you don't collect any charges. Infosys uses the bus for transporting its own employees, but does not collect any charges, sir. Now, will your answer change, sir? Your views, please. Any views? Can they still claim ITC?
Yes, yes.
What is the reason, sir?
Same reason, passenger. They are supposed to be the passenger. Employee also a vessel. He is also.
No, they are not recovering charges.
Doesn't matter.
Okay.
Absorbing the company is absorbing the money.
Okay. There are two views, sir, or rather two ways in which it can be interpreted. You are engaged in, yes, if you pay tax, it is different. But there is a separate proviso under clause 2 which says gifts up to 50,000 per annum per employee in a financial year, meaning you can treat, it can be treated neither as supply of goods nor as supply of services. So basically it is a non-supply. If Infosys wants to opt for that route, definitely ITC cannot be availed. But on the other hand, if they pay on the outward supply without taking benefit of that gift clause, this they are pretty much eligible, no doubt. There is also another catch there. Only up to 50,000 you are eligible. Above 50,000 you have to again fall back into the taxable supply clause.
Students for the college purposes, if you are talking about an employee, what happens in relation to the college provides first for the students?
Sir, any service by an educational institution to its students, faculty and staff, basically there is an exemption clause separately available in the exemption notification. Sir, is ITC eligible on purchase of crane or earth mover?
It's within the factory only.
Yeah, it is.
Being used.
It is eligible.
Not fit for running on the roads.
Okay.
It is registered under the Motor Vehicle Act.
Sorry?
If it is registered under the Motor Vehicle Act,
Okay.
then they are eligible for that.
Oh, you are saying that if it is registered, it is eligible. Okay. Yes, sir?
Run on, capable of running on roads is within factory and other things, it is eligible. That's what it is.
Okay. So you are saying that since it is running within a specified premises, it is eligible. So two contrary answers. Anybody else? Please come up with answers. Any other contrary views? When we started the discussion, motor vehicles. Sorry, sir. Okay. Okay. So it's a capital goods. So according to you, is it eligible or ineligible? Eligible. Okay.
It is eligible. It's an input for the construction.
Okay. Motor vehicles, as per the definition of the Act, where GST Act directs you to Motor Vehicles Act. Motor vehicles means any mechanically propelled vehicle adapted for use on roads adapted for use on roads. It includes a chassis on which a body has not been fit. It also includes a trailer, but it does not include a special vehicle which is adapted for use within a specified premises. So therefore, you can say that it is not a motor vehicle. But please note that I have put this in italics, and other conveyances are in italics. What is meant by conveyance? Conveyance means any vessel, aircraft or vehicle. So whatever has been left out in motor vehicles, all of that has been brought in again under the definition of conveyances. So strictly, if somebody has to read the act, very strictly, it is ineligible, very strictly. But it may not stand the test of law, is my opinion. Very strictly, it is excluded from the definition of motor vehicle, but included under other conveyances. And that is why the government has now proposed a significant amendment in this clause. What they are going to do is, motor vehicles, they are going to adapt in such a way that it will, meaning ITC will be ineligible for motor vehicles used for transportation of passengers up to 13 persons, with an approved seating capacity of up to 13 persons, including the driver. And they are going to delete and other conveyances, the phrase and other conveyances. So this is going to be a welcome move, because it going forward, meaning, sir, kindly note, after the proposed amendment, once the proposed amendment is brought into force, only then a lot of problems will get solved. The restriction post the amendment would be only on motor vehicles for transport of passengers or persons with approved seating capacity of up to 13, including the driver, and the word other conveyances are going to be deleted. And sir, to answer your question also, vehicle insurance, repairs and maintenance, the government has come out with a separate clause saying that on whichever vehicles you are eligible to claim ITC, on those vehicles you can also take insurance general, repairs and maintenance. So on vehicles which you cannot avail ITC, you are still not eligible. That is the proposed amendment. So the amendment itself speaks the mind of the lawmaker. See, all these days we have been deliberating. Somebody said yes, somebody said no. But the government has now come up with a proposed amendment. Sir, please note, these are proposed amendments. What we are now talking is are proposed amendments. That's why I kept it toward the end. We should not confuse the present and the future. The amendments may get passed, may not get passed.
So in this case, if the proposed amendment is going to come on an automatic, I can take the ITC now, because the government itself says that it is then only afterwards it is not eligible. So it is now I am eligible.
Sorry sir, I didn't get you.
The proposed amendment is going to come by September.
April, let's say.
So till September, I can avail insurance and other things on ITC, because the government has restricted only from September.
No, sir. See, we have to understand this.
Expressly, that's why it has come out.
I understand your view, sir, but what we have to understand is the lawmaker has a different intention in his mind. He says very clearly that if you are eligible to take ITC on motor vehicle, you can also take insurance, repairs and maintenance. If you are not eligible for ITC on the motor vehicle, please forget about the insurance repair. That is the mind of the lawmaker, and that is very clear. That is very clear. Now, after the proposed amendment, I am saying it is much more clear.
Again, it is prospective only.
Sir, as assessees, we have been fighting with the government to ensure that they don't make any retrospective amendments. So, this is going to be a double whammy for us. So, நம்மளே சொல்லிட்டு இருக்கோம் ரெட்ரோஸ்பெக்டிவா எதுவும் போடாதீங்க அப்படின்றோம் நம்ம. You have a point, but the government is going to have its point too.
In the proposed GST Council last meeting, they said it otherwise. They said I think in the last GST council meeting, the meeting said the other way. They said insurance and then motor vehicles in respect of vehicles will be allowed. That is what they said. Not
Sir,
allowed.
I also read the press release. The press release is poorly worded, sir. That is how I would like to say, because I am reading this straight out of CBIC's press release on the proposed amendments,
Correct.
which has been put up to the public.
Yeah, correct.
So on that, what I am saying holds good. But what you are saying is from the press release of the GST council meeting. I think they would have forgot to put the word not.
No, I have taken from CBIC website on.
Correct,
There are
sir.
4 documents which comes.
You are very right. I also read that it has been poorly drafted. It is quietly reading contradictory to what are the proposed amendments.
Okay.
I read that. So we'll move to the next slide. ITC is not available on food and beverages, restaurant services, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery. There are 2 exceptions. So if any restaurant obviously cannot avail ITC, outdoor caterer also, meaning if you are getting an outdoor catering service, you cannot. If you are getting any service from a restaurant, obviously you cannot. There are 2 exceptions where you can take. If the inward supply is used for making an outward supply of the same category. Classic example, subcontracting by an outdoor caterer. Outdoor caterer gets an order, he in turn subcontracts it to another outdoor caterer. Obviously, the person who is in the middle, he can avail credit because he is also billing as an outdoor caterer. So clearly that is allowed. Second example, inward supply is used as an element of taxable composite or mixed supply. Classic example, suppose CA Institute charges the audience for the lecture and also for the food, and then they in turn get food from an external vendor. Are they eligible? Yes, pretty much they are eligible because they are making a taxable composite supply. So to that extent, yes, they are eligible. Very popular question, and I am very sure in several places this has been going wrong. So we'll deliberate on this. Is input tax credit available on canteen recoveries, sir? Let us take the first question on part or full canteen recoveries. 100 rupees is the cost of the food. I am collecting only 50 rupees from the employees. Am I eligible to take input tax credit? I get an outdoor caterer. Somebody comes to the kitchen, they cook food and serve it to the employees, and let's say I am paying 100 rupees to the caterer and I am getting 50 rupees from the employees. Am I eligible to take input tax credit? Any views? Yes, sir. Any views?
In my opinion, no.
Okay. Any other views, sir?
We have to look into the employment contract. We have to look into the employment contract.
Okay.
If there is an obligation on the employer to provide food,
Okay.
then it becomes a consideration for employment.
Okay.
Then it's not a supply at all.
Which means it has to be covered under your CTC.
Correct.
And taxed under the direct tax laws. Under the direct tax laws. Correct? Income tax. Okay. Any other views?
Similar to the transportation vehicles for employees, same logic.
Perfect, sir. Sir, supply between related persons in the course or furtherance of business, even if it is made without consideration, squarely it is taxable. Schedule 1 is very strong for that matter. Any supply of goods or services between related persons, and related person includes an employer and employee by virtue of section 15 of CGST Act. So all the mechanism is in place.
50,000, up to 50,000 there is an exemption.
I'll cover that, sir. I'll cover that. So out of 100 rupees, you are taking 50 rupees. So the next question is, are you eligible for only half the credit or are you eligible for full credit, sir? Any views?
It is only full credit.
Value of taxable supplies between related persons and wholesale.
Perfect, sir. Brilliant answer. See, the minute you engage with an employee, the valuation under section 15 of the act fails, that's all. You have to go to the rules. Under the rules, you have to opt for open market value. So which means the officer will tax the 100 rupees that you are paying to the caterer. That will be your taxable value. So you are engaged in an outward taxable supply. Whether you collect 50 rupees or whether you collect 100 rupees. But my only point of contention is, if you are collecting 50 rupees also, by virtue of the rules, you will still be forced to pay tax only on 100. You cannot say that the remaining 50 is a gift, because it is only one supply. Now, the second part of the question, free canteen, sir. Free canteen. You are not charging your employees at all. Are you still eligible to take credit? Any views, please?
Up to 50%.
Perfect. Similarly, proviso to clause 2 of schedule 1 clearly allows benefit up to 50,000 per employee per financial year. So if you are claiming that benefit, then you cannot take ITC up to that extent. The minute you cross that threshold, yes, you are engaged in a taxable supply, and therefore you can take ITC benefit. There is a proposed amendment in this. What they are going to do is, any goods or services which have to be given by the employer to the employee under any legal obligation, for all such goods or services, basically the government is going to allow ITC by virtue of a proposed amendment. Please note, sir, this is a proposed amendment. So if you are running a canteen under the Factories Act, please note, sir, if you are running a canteen under the Factories Act and you are not collecting any money from the employees, irrespective of whether it is less than 50,000 or more than 50,000, after the proposed amendment, you will be able to take ITC. But this is a proposed amendment, sir, please note.
Sir, excuse me, the previous slide, see, you said about beauty treatment, health services for personal, but in the case of entertainment people who pay service tax on their fee, their life hinges on the way they maintain their beauty and their health, for that matter, going to gym and things like that. So I think there is a direct nexus to their profession to this thing, and they should be eligible for that.
Yes, my view is that if you are a celebrity and if you are using inward services used for taxable outward supplies, yes, provided the condition is you should be engaged in making an outward taxable supply. Yes, you are eligible, sir. But per se, if you are not engaged in any outward taxable supply, then you are ineligible. ITC is not available on rent-a-cab, life insurance, health insurance. Exceptions, just like what we saw in the previous slide, inward supply is used for making an outward taxable supply. Classic example, subcontracting by rent-a-cab operator. You hire a cab, that person goes and again hires another cab. Is that person eligible to avail input tax credit? Pretty much, yes, he is eligible, because he is paying tax to the other person and then he is billing you. So he is engaged in making an outward taxable supply. Similarly, inward supply is if it is used as a part of taxable composite or mixed supply, then you are pretty much eligible. Classic example, hotel charging pickup drop. Classic example, hotel charges room rent, it also charges pickup and drop, airport pickup drop. Are they eligible? Yes, they are eligible, pretty much eligible. We have seen the word rent a cab. Suppose a company hires a bus for transporting employees to work, to and fro work. Is ITC eligible? Note the word, sir, rent a cab, but the word cab is not defined under the GST law. The word cab is certainly not defined under the GST law. So, is ITC available on renting of bus for transporting employees, sir? Your viewpoints, please.
No, for cab definition, you have to go to motor
Renting
vehicle.
of bus, renting of aeroplanes,
Okay.
renting of any other things.
Allowed. Okay. Any contrary viewpoints, sir? Yes, sir. You were saying something.
You have to go to the motor vehicle act.
Yeah.
Okay.
Rent a car.
Okay.
So there he talks about any number of passengers.
Okay.
It is squarely falling under cab. So it,
Okay.
it is ineligible.
Because if you look at 17.5 clause A, it talks about motor vehicles per se, whereas you look at 17.5 clause C and D, it talks about rent a cab.
Cab. Correct.
So hence the view can be taken that yeah, it can be.
Okay.
That is interpretation.
See, if you read section 17.5, there are a series of dots connecting this section, sir. Motor vehicles, which is not used for transport of goods, not eligible. Beauty treatment, life insurance, health insurance. There are a few dots which connect section 17.5. Restaurant services. Can you try to decipher what are those dots which are connecting section 17.5? There is some similarity in all this. Precisely. Items of personal consumption has been blocked. That is the intent of the lawmaker. So when he uses the word rent a cab, obviously we have to understand the spirit of the section, that he is intending to curtail the use of cab for personal purposes. So which means if somebody is using a bus for transporting employees to work, pretty much it is eligible. Pretty much it is eligible, because I mean, getting into yes, cab definition is another way of routing this, but my viewpoint is that section 17.5 tries to curtail items of personal consumption, and transport using or rather hiring of bus will not fall under that perspective. That is my humble view.
But proposed amendment covers all motor vehicles. Proposed amendment.
Sir, not in this clause.
Proposed amendment.
It touches clause, the first clause. The first clause.
No, here if you go to the exception, it talks about those inward supplies used for making outward supply of same category. Suppose if he is in a manufacturing company or is a IT company, will he be eligible for this one input credit if you are transporting employees?
Sir, my view is that per se rent a cab, see, when will you look at the exceptions, sir? Only when you get caught in the first clause, you will try to look at the exceptions. My sense is that 17.5C, if I am not wrong, does not cover this example which we just discussed, because the intent of the lawmaker is also to curtail items of personal consumption, is predominantly to curtail items of personal consumption. So, the minute you say rent a cab, my view is that a bus will certainly not fit into this clause. I mean, we need to analyze the spirit of the lawmaker also, because the word rent a cab is not defined under the GST law. I mean, one can always go to Motor Vehicles Act, one can even look at service tax law, the erstwhile service tax law. But
Service tax talks about only motor vehicle. Service tax also definition is not there for cab.
no, cab definition is in the old section 65 is there. Old section 65, not in the post negative list regime.
They are only refer to the motor vehicle act.
No, sir, I think there was a definition for cab under section 65 long back. That is about, let's say, must be more than 10 years old, that definition. Is ITC available on recovery of cab expenses or insurance cost by the employer? Any viewpoints? Any viewpoints, sir? It's the same as what we discussed in the last two slides. If you are recovering, yes, you are engaged in a taxable supply, you have to pay the tax, and then obviously you can claim ITC. If it is not recovered, then again the gift clause will get invoked up to 50,000. There is no question of taking ITC because you are engaged in a non-supply.
Recovery of cab expenses means it includes GST paid on that also. No?
Sorry, sir, I didn't get you.
Recovery of cab expenses means it includes the GST paid on that also.
Sir, when you, as a component of cost, yes, you will include. Yes, you will include, because obviously it is a cost for you. You will include that. But here what I am trying to say, suppose, let's say, 1,000 rupees is the cost of transporting employee to work. Okay, that is the amount that you pay to the cab operator. Okay. On the other hand, you recover only 400 rupees from the employee. Irrespective of whether you recover 400 or let's say 1,000, you are engaged in a taxable outward supply and you have to pay tax on the 1,000 rupees. You have to pay GST on the outward supply on 1,000 because valuation rules will kick in. So even if you are recovering only 400 out of 1,000, you have to pay tax on the full open market value, and it is very easy for the officer. You have a back-to-back bill, the officer will refer that bill.
You can make the bills in the name of employees directly.
Yes, you can, sir. You can. I mean, it is a taxable supply. You are eligible to collect GST also.
We can ask the cab operator himself to make the bills in terms directly in the employees.
Pretty much, yes. Yes, you can.
As a part of the agreement.
Yes.
Only thing
And you can still go to some innovative structures, or you can get into a tripartite agreement where you hold money in escrow for the employees, and then the agreement will be between the employee and the cab operator. I mean, there are several models. Yes. There is also one more exception. Suppose there are notified obligatory services to be provided by the employer. Yes, you can take credit. Example, I think Karnataka Shops and Establishments Act mandates that, in case of women who are working on late night shifts, if they are transported, then you need to, basically the employer has to provide transport. So in such cases, yes, it is, you can take credit. But the question is, notified obligatory services. The act is not clear whether that notification will come under GST law or under some other law. That is one lacuna which is still there. But that lacuna is going to be sealed with the proposed amendment, where any service or goods which have to be compulsorily provided by the employer to the employee under any legal obligation, in all such instances ITC can be availed. So this question of whether it is going to be, whether this notification will be under GST law or will be under some other law, all that will be put to rest.
Sir, when you say legal obligation, is it given by way of an agreement?
No, under any law, not under an agreement. It is under any law. That is why, in fact, I have raised this point of notification under GST law or any other law. It is not under an agreement.
any law means the Wages Act prescribes that whatever the agreements I am entering into with the employee, I have to enforce them.
That is by virtue of an agreement, sir. I mean, that's by virtue of a contract, separate contract between you and the employee. This is a obligation cast on the employer under a law, under any law. So, let's say Karnataka, I think Karnataka Shops and Establishments Act specifically says that if women employees work on late night shifts, then the employer has to provide. So it is an obligation which is cast under the law. Under the law.
The Contract Act is a law.
Contract Act is a law.
So, as per the Contract Act only, if I am having a contract with my employee, that I have to pay so and so things, then it becomes obligatory on my part.
Yes, sir. It is an obligation under a contract. It is not an obligation under law. Obligation under contract. What you are saying is an obligation under a contract.
Whether you have a contract or you don't have a contract, you want to do something, that is law.
So that instance will get covered. Obligation under a contract is not covered. Obligation under law is covered. A very critical slide. I don't know what will be the possible damage to the real estate and construction sector, in the years down the line. Let's discuss this. ITC is not available on works contract service used for construction of immovable property. What is immovable property? What is immovable property, sir? Can somebody come up with a meaning or explanation or definition?
That which is fixed to the land.
Okay.
Or it cannot be removed from land unless there is a possibility of a damage.
Okay. Any other contrary views or any other supporting views? Immovable property has not been defined under GST law, nor is it having any reference to any other law. So therefore we have to go to the General Clauses Act. Immovable property includes land, building, anything which is attached permanently to the building is also immovable property. So to that extent, even let's say these fixtures would also form part of immovable property, more or less. Meaning not these fixtures, meaning I am saying if you are having, let's say, a modular kitchen, if you are having modular furniture which is attached to the earth, all of that.
Even sanitary ware also.
Yes, even sanitary wares which are used in the bathrooms, all of that will fall under immovable property. I think there is a ruling also specifically on sanitary ware.
In air conditioners.
That is removed.
Air conditioner can be removed.
There was
Earlier
recently
excise
assembly
law,
judgment.
earlier excise law determined the criteria of removable item or removable item. We had so many rulings which define what is a removable item. So I think we can borrow all those.
We can borrow, but yes, to some extent, yes, we can certainly borrow because the word is not defined. Obviously, one has to go by the judicial meanings, etc.
Sir, lift. What about lift?
Yeah, lift you can.
Lift is immovable.
Lift, in my view, is an immovable property. In my view, it is an immovable property because it is more or less fixed by way of a foundation to earth. Yes, you can remove it. I am not trying to say no, but it is not without damages. It is not without damage. In my view, because it is fixed by way of a foundation to earth.
Any machinery fixed to the factory will be
There is an example.
Plant and machinery there is a separate definition, sir. Plant and machinery has been defined to mean that plant and machinery means an equipment, apparatus or machinery fixed to earth by structural foundation or support. So, if let's say you are constructing a mall, Phoenix Mall wants to construct another mall and it avails works contract services for construction of the mall, squarely it is ineligible. Squarely ineligible.
These fabricated C structures,
Sorry, sir?
fabricated C structures, prefabricated C structures.
Yes.
They remove it and then just document, just attach to the earth. You can also then, I think,
If it is permanently fastened to either earth or anything attached to earth, if it is permanently fastened, that is a legal test which has been put in several cases. It has to be permanently fastened to either earth or anything which is attached to earth. For example, it has to be permanently fixed to the earth, or if there is a building, then it has to be permanently fixed to that building. If you are saying that it can be removed at any point of time,
it can be removed.
then it might not.
It can be removed. Because I may not be removing for years to come.
Yes, that is
something different.
That is a legal test to which every assessee will also, strongly argue, sir. You will argue to that point because if you can remove, whether you remove or not is a different question. The judicial meaning says that anything which is permanently fastened to earth, permanently fastened. So unless you break and then remove, for example, a machinery which is fixed to earth, if you have to remove that machinery, you have to break and then bring out that machinery. Then
We are not. We are only going to break the concrete structure.
yes.
So similarly here also, the bolt will not be there. We will be putting some concrete structures on that. So we are going to demolish concrete and we are going to remove.
I think there is also a ruling on the same thing. I think Triveni engineering is one classic example, if I am not wrong, correct? So if you are simply just using some bolts and nuts to simply just fasten the machinery to ensure that it does not wobble, then it is not immovable property. On the other hand, if you use some civil structures to permanently fasten, then it becomes an immovable property. If you are using civil structures, etc., to permanently fasten the plant and machinery to earth, then it is an immovable property. That was the test which was laid down in Triveni engineering, if I am not wrong.
So that circular has also come in excise.
Yes.
Wherein they have said that if you are going to remove that particular structure, it is going to cause irreparable damage. To
Yes,
the
irreparable damage, that is the word. Irreparable damage.
Damage to what? To asset concerned or to the civil structure?
To the foundation, sir. To the foundation and to the structure. Both. To the machinery and to the... Meaning, you cannot simply just move it just like that. It is permanently fastened.
See,
If you-
people cannot be there. No, definitely once I remove that, I can cement it off and then definitely it's going to be.
Sir, but if you look at...
It's going to collapse.
No, question is, if you remove that machine, then it has to cause an irreparable damage, just like how he highlighted, it has to be caused irreparable, meaning more or less the machinery will be of no use. You cannot simply just use it, put this to some other location and then use it. It's like a building, sir. Classic example building, sir. நீங்க ஒரே ஒரு ரூம் கட்டறீங்க, அந்த ரூமை உங்களால என்ன பண்ணாலுமே மூவ் பண்ண முடியாது.
Only my question is with regard to prefabricated steel structures.
Okay. Sir, as you said, you can remove it.
Yes.
If it is removable, then it will not fall under immovable property, sir. You can argue to that point. If you say that it is a prefabricated steel structures can be easily removed because it will all be fixed by nuts and bolts, right? Everywhere, just like how it is done in a factory shed. Then you can argue to that point. Why should you say that it is permanently fastened to it? If it is actually not permanently fastened to it, then you can obviously argue to that point. That is my view. You can.
The point is, without that, the machinery can still function.
No, that is not the test which has been put. The test which has been put is, if you are using that prefabricated structure, நீங்க அதை remove பண்றச்சே அதுல irreparable damage ஆகிதா உங்களால remove பண்ண முடியும்னாக்க, then it is immovable property. இல்ல சார் ஈஸியா நான் கைட்டினாக்க வெளில வந்துரும், நான் அதை கொண்டு போய் வேற இடத்துல போட முடியும் அப்படினாக்க, then it is not immovable property.
Also, if the capital asset can function, then it is not immovable.
Sorry?
Without that, if the capital asset can still function,
Okay.
like for example, you have a lift,
Okay.
you have an electrical insulation.
Okay.
Electrical insulation is very much part of the capital asset. So independently, if you do it, it cannot be allowed.
Okay.
But without this electrical, the machine cannot function.
But
so it is forming part of the capital asset.
it will form part of capital asset, no doubt. But the question is whether is it immovable property or not is the question here. That is the prime question that we are focusing on.
Whether we can consume it in some other place.
Sorry?
Consume it in some other place is not the issue. It is only consumption based. If you can consume it, you can use it.
Value is lost.
Okay.
In those cases, do we actually take it
My sense is it will be part of immovable property.
I'm talking about the ducted.
Okay.
The ducted is different from VRF.
I don't know what is meant by VRF, frankly.
VRF is something where the complete civil structure goes along with the air conditioning
Okay.
system as well.
Okay.
Okay, as in a ducted, technically you are trying to combine certain outdoor and indoor in some combination.
Okay.
VRF is not like that.
Okay.
It's like where you completely have an air conditioning system.
Okay.
It's not an air conditioner. It's an air conditioning system.
So it is inbuilt into the civil structure.
Something like mall. Okay, malls you don't technically see. It's not a ducted
Even then,
one.
when
It's a
removed,
VRF.
it is not an independent asset by itself.
So which means you cannot easily remove it, right? If you remove it, it is going to cause irreparable damage. Then it is immovable property.
I cannot, take it and use it.
It is immovable property. Undoubtedly, it is immovable property.
This is also covered in that circular, so I think we can just ask them to refer that circular.
Only thing is department, இது எப்படினாக்க சார், டிபார்ட்மெண்ட்டுக்கு சாதகமா இருந்தது அப்படினாக்கா அந்த சர்க்குலர் ரெஃபர் பண்ணிப்பாங்க. டிபார்ட்மெண்ட்டுக்கு சாதகம் இல்லைனாக்கா சார், that is excise, sir. Excise is dead. I mean, as far as your products are concerned, excise is dead long back. So don't refer excise circular.
There only our work comes, sir.
Correct. You are right. You are precisely right. No, I am just varying you the viewpoint of the officer.
But only thing is, we should not blindly, we should not put the client into problem.
Correct. You are right.
If there is something, some leverage, then we can try to.
Yes, you can. Similarly, goods or services used for construction of immovable property on own account. Suppose you want to, construct your own factory. You buy materials, sand, cement, etc., and then you engage laborers and then construct the factory. Undoubtedly, ITC is ineligible. There are a few exceptions. If you are using a works contract service for further supply of works contract service, then you can take credit. Similarly, works contract service used for construction of plant and machinery. Goods or services used for construction of plant and machinery. What is plant and machinery? We just discussed apparatus, equipment and machinery fixed to earth. But it excludes civil structures, land and buildings, and it excludes land and buildings. Construction includes reconstruction, alteration, blah blah, to the extent of capitalization. A very dangerous way to actually word, that is my view, because assessee might take a different view and say that, sir, I am not capitalizing it. Yes, to that extent you can also argue. Suppose if this window pane gets broken, I can always say that, sir, I have used it. I have even if it is let's say permanently fastened, blah blah, whatever. I am not capitalizing this item, and therefore I will not say that it is ineligible. I will take credit on it. Yes, you have a point, you can take. Next point, sir. Works contract service and construction of immovable property. Are both the same or are they different, sir? Very, very tricky question. I can bet that this is going to cost, let's say, taxpayers a few crores for each taxpayer possibly. Are works contract service and construction of immovable property the same?
If you had not asked this question, I would have asked this question to you.
அதுக்கு தான நாங்க கேட்றோம் முதல்ல.
I'll tell you what the confusion is here. Schedule 2, para 5 clause.
Yeah. I'll come. Wait. Any views, sir? Are they the same? Are they different? Any views? Please come up with your own views, sir. Are they the same? Works contract.
GST works contract is always related to
Immovable property. Perfect. You are right, sir. So, does it mean that works contract, which is obviously related to immovable property, and construction of immovable property are both the same?
Construction is a subset of works contract.
Brilliant answer. Now, here is the catch. Works contract service entails 18%. Construction of building obviously 12%, with obviously that 1/3 abatement, etc. So every builder wants to use only the 12% clause. They will go behind 12%. They don't have an option also. I don't want to get into the debate because many people again will start the view, have a viewpoint that you can choose either 18 or 12, but I am of the very strong opinion that you can use only the 12% rate if you are a builder who convey both land and building. If you are conveying both land and building, only 12% rate, that is my viewpoint. I don't want to get into that discussion, but short question here is, are works contract and construction of property the same? If you refer schedule 2, clause 5b, if I am not wrong, refers to construction of immovable property. Clause 6 refers to works contract. So obviously you have both. Works contract is also there, construction of immovable property is also there. So both of them are under different clauses. Why? And similarly, if you go to the rate notification also, construction of building 12%, works contract service 18%. I can see the day when some officer is going to say that நீங்க 12ல போட்டா 18 சொல்லுவாங்க, 18ல போட்டா 12 சொல்லுவாங்க. That day will be there. As chartered accountants, we have to fight them out and say that construction of building is a subset, it is a separate special clause. Obviously, you have to go only with that clause. Anything which is not included in this, yes, you can put it under works contract service. But I see that day not very far.
Sir, ITC on flats?
ITC on?
Flat.
For whom?
The company purchases flats for renting.
Okay.
ITC is available on that GST?
You purchase it for renting.
Yeah,
No.
it's renting of immovable property.
You are talking about renting of immovable property. That is not allowed, sir. Sir, it is squarely disallowed. You see the previous slide. Works contract services or goods or services used for construction of immovable property. What you are saying is not getting covered into the right hand side. So obviously it is disallowed. Sir, we will cover this slide a little quickly because this is very simple slide. Sorry, 1 minute. Membership of club personnel, LTC, composition dealer, non-resident taxable person, goods received by non-resident taxable person, used for personal consumption, all of these are ineligible. We know that, let's not discuss about that, it's quite basic. Very, very critical slide, very important slide. Let us spend some time. This slide will be of practical use. ITC is not available on goods lost. When you manufacture, obviously there will be some loss. Please note, sir, there will be some loss. Can you take ITC on the goods which are lost during manufacturing? Okay. There is a viewpoint that if it is a normal loss, if it is a normal loss, correct, sir? Right. Any other viewpoints? Yes, he is precisely right. If it is a normal loss, you can still go ahead and take credit, but if there is an abnormal loss, you cannot. Goods stolen.
Abnormal loss also, it is used for the purpose of business, because if you look at the business definition, manufacturing is also one point where it is clearly given that if it is used for the purpose of manufacture, then still it will qualify as input tax credit.
Section 17.5 starts by saying that notwithstanding anything contained in section 16 subsection 1. So 17.5 overrules section 16.1. You can take ITC if it is not barred by 17.5. So 17.5 bars it. Goods lost. 17.5 starts by saying that notwithstanding anything, notwithstanding loss. Goods stolen, goods destroyed, goods written off. Goods written off means what, sir? Partial write-off or full write-off? Sorry, sir?
Earlier law specifically covered partial or full write-off.
Yes, but that is not present in the current law. So if there is a partial write-off, if there is a full write-off, you will obviously reverse. But if there is a partial write-off, will you still go ahead and write off partially?
Naturally, sir.
Yes, my sense is you still have to, because you have to interpret it in such a way that if there is a write-off, yes, it will trigger ITC reversal. Goods disposed of as gift. Is ITC eligible on gifts to dealers, sir? Target discounts. நீங்கள் வந்து இவ்வளோ 5 crores turnover பண்ணீங்கன்னாக்க I will give you a car, or I will give you, not car, let's say I will give you 2 or 3 fridges.
Gold coin.
Gold coin.
If it is mentioned in the invoice, yes.
Okay, I think you are talking about discount, sir. I am referring to gift, a gift. Plainly I am saying, if you do 5 crore turnover, I will give you a fridge. If you do 5 crore turnover, if you cross 5 crore turnover, I will give you a fridge. I will give you a fridge. So, should I, meaning when I give you the fridge, should I reverse credit?
That is known at the time of supply, need not negotiate. It is done later, I think.
But you are talking about discounts, sir, again. 15, you are referring to section 15(3)(b). But here we are talking about gifts. Gifts is something quite different from discount.
We need not reverse. This is intended for the furtherance of business only.
So it may be gift.
Maybe it's
but
called a gift.
It is part of the marketing expenditure.
Okay, okay.
Maybe
I have 3 viewpoints on this, sir. I have 3 viewpoins on this.
No, you are not dealer in fridge.
Sorry?
You are not dealer in fridge.
Oh, okay. That's another viewpoint, okay. I will share my viewpoints, 3 viewpoints. Number 1, you admit that it is a gift. Straight away, officer will say reverse. Straight away. Next, you say, no, sir, it is not gift. Sir, இது gift கிடையாது. இது வந்து agreement பாருங்க. I have very clearly said that under the agreement, I will give. So there is an obligation. It is in the course or furtherance of business. So where is the question of you talking about a gift? Will we not argue? Obviously, as chartered accountants, we will definitely argue. But the officer has an ace up his sleeve. Clause 1 of Schedule 1 clearly says permanent transfer or disposal of business assets on which ITC has been claimed, even if you don't take any consideration. It is squarely a taxable supply. Taxable supply. நீங்க ரிவர்ஸ் பண்ணலைன்னா பரவாயில்ல சார், டாக்ஸ் கட்டிட்டு போங்கன்னு வாங்க ஆஃபீஸர். சிம்பிளா சொல்லுவாங்க.
What do you mean by business asset? If only it is capitalized.
Anything, sir, it includes capital assets, it may include current assets, because the definition is wide enough. It says business assets. It does not use the word capital, it does not use the word non-capital. Business assets, permanent transfer or disposal of business assets on which ITC has been availed. Squarely, he will say, pay tax. Then you up your ante and say, illa sir, na supply ellaam pannala sir. No problem. What you have given to the dealer is a consideration, which means he has done some supply to you. அவர் உங்களுக்கு business நல்லா வளர்த்து கொடுத்திருக்காரு. So you have given a consideration, because the definition of consideration has been amended, or rather not, I should not say amended, it's a new definition under the GST law. Consideration can be in furtherance to or as an inducement of supply. So I am giving the consideration as an inducement of supply. So which means நீங்க ஒன்னு gift ன்னு சொல்லுங்க, ரிவர்ஸ் பண்ணிட்டு போங்க. gift இல்ல business ன்னு சொல்றீங்களா, நீங்க டாக்ஸ் கட்டிட்டு போங்க. ரெண்டுமே இல்லைன்னு சொல்கிறீங்களா, ஒன்றும் பிரச்சனை இல்லை, நான் உங்கள் டீலர்கிட்ட போய் பேசிக்கிறேன், அவர் டேக்ஸ் கட்டணும், ஏன்னா நீங்கள் கொடுத்துருக்கிறது கன்சிடரேஷன். தட் இஸ் த சிம்பிள் வே இன் விச் யூ வில் கெட் காட். எந்த சைடில் போனாலும் தவிக்க முடியாது சார்.
If you are not taking ITC, it's nothing.
Nothing sir, this clause will not even apply. On festive gifts, undoubtedly, Diwali கொடுக்குற gift gone with the wind.
I have a small point with respect to my previous question on the abnormal loss, because there is a huge difference between loss of goods and then goods lost. You are talking about
Brilliant point. That is why I use the word loss of goods. See, the words is ITC available on loss of goods. I did not use the word goods lost.
because 17.5 restricts.
Yes, abnormal loss is goods lost.
No.
Normal loss is loss of goods.
No, it's both are in the loss of goods only, because both are in the process actually. Goods lost is as it
Abnormal loss is not in the process. Abnormal loss is not in the process.
Yes, it will be. Maybe
No, no,
because
sir.
of
That is why you call it as an abnormal loss. Why do you call it as an abnormal loss? Because it is not in the process. That is why. Is ITC available on gift to employee up to 50,000 or above 50,000, sir? Any viewpoints on this? You are giving a gift for mobile phone. You are purchasing a mobile phone and giving it to all your employees.
Okay, and you will not get any input credit.
Nothing. No input tax credit. Whether it is taxable supply or non-taxable supply, because here the clause does not. There is no exception here in this clause which says that if you are engaged in taxable supply, you can do so. If you say it is a gift, gone. If you say it is not a gift, no problem, pay tax and take ITC.
It is not a supply at all, sir.
Why, sir?
Up to 50,000.
Gift is also a form of supply, sir. Gift is also a form of supply. If you read clause 2 of Schedule 1 to the GST Act, beautifully it would have been drafted. Supply between related persons or distinct persons when made in the course of business, provided that where an employer gifts to an employee of a value not exceeding 50,000. So, when you write an exception, obviously that exception has to draw its meaning from the main clause. So, a gift is also a form of supply, sir.
For my marketing people, I give everybody a mobile phone, and they use it only for the official purposes.
That's a different thing, sir. Here we are talking about gifts. Completely, gift is meaning gift. What I mean by gift is something which is given without expecting anything in return. So, நீங்க வந்து அவங்களோட personal purpose-க்கு நீங்க கொடுக்குறீங்கன்னு வெச்சுக்கோங்களேன், then it is different. If you are giving it to the marketing person for business purpose, then it is squarely eligible, sir. You can take.
When he resigns, he is supposed to give it back and go.
Sorry, sir.
Pharmaceutical industry is if you buy 100 bottles, I'll get 10 bottles free and all that. In that case, we have to reverse the input credit for those.
Sir, that's what I am coming to next. Goods disposed of as free samples. Note the word, sir. This is the same word which is used in that. Goods disposed of as free samples. Free sample, we all know. Free sample, obviously, pharma industry is the one which will come to our mind. If you give free samples, yes, gone. But if you give 100...
It's not a free sample. If it is manufacturing, it is a free sample. If it is a trader and gives it as an offer to the retailer, in that case.
That is a quantity discount.
Yes, sir. I'm just covering that. 100 grams free with 1 kg pack, sir. Sir, 4 kilo vaina 300 gram free, sir. Should you reverse? Let me talk from the manufacturer's viewpoint itself, sir. Because this is the scheme which is doled out by the manufacturer. Should you reverse credit? Because every stage we can't reverse credit, but at one stage, let's talk at stage 1. Manufacturer.
It is eligible because material consumption has taken place.
Okay. Any other viewpoint, sir?
We will bill it for 1 kg only.
See, 100 rupees is the cost, 100 rupees 1 kg. Next month you come out with an offer saying 100 rupees 1 kg plus 30% free. Will you take ITC on that?
Yes.
Okay, here is one viewpoint. Any other contrary viewpoints? Contrary.
You can give it as a discount, right? The extra 30.
Discount is different, sir. I'm not talking about a discount. I'm not talking about discount.
I'm billing for one.
Discount has been specifically mentioned in section 15. Specifically mentioned. Post-supply discount, pre-supply discount, all that is mentioned, no doubt.
He has given the planning, that's all.
He has given the planning. No, I'm not talking about the planning part.
No,
No, in the billing you will mention 1 kg or 1.300.
100, 1 kg plus 30% extra. Free. Obviously, வெளில போறச்சு நீங்க இன்வாய்ஸ்ல போட்டு தான் அனுப்பிச்சாகணும். அந்த ஃப்ரீ மெட்டீரியலுக்கு போட்டாகணும் இல்லையா? Simple sir. நீங்க free sample.
It may be free, but it's not a sample.
Beautiful answer. Beautiful answer. But you know, as an officer, what I will say, I will again refer to clause 1 of schedule 1. Permanent transfer or disposal of business assets on which ITC has been availed. Close. Sir, this clause, all of us know, if recipient fails to pay value plus tax within 180 days, it has to be reversed with interest. We know that. What about nil consideration supplies? There is a deeming clause. Suppose there is a nil consideration clause supplied between employer to employee, that is also deemed to be nil, no problem. A very important question, should ITC be reversed in case of retention money? Retention money. Sir, retention money. How you are billing 100 rupees, you get 95, 5 is still there, what do you do? 5 is still with the recipient, he has not paid you. Will you reverse or will you not reverse? Any viewpoints, please?
Eligible, it cannot be reversed. Need not be reversed.
What is the reason, sir?
Because he retains it only pursuant for a obligation of performance.
Okay.
It is my money. I will be getting it later, that's all.
Please note the word, sir. If the recipient fails to pay, that is the way in which the section has been worded. If the recipient
Then it becomes a bad debt.
fails to pay.
If I am not getting it's a bad debt, then also I am eligible for, because post sale only it is not recoverable. But at the time of supply for the billing, I have incurred the expenditure of the material.
No, sir. The question is ITC reversal on the part of the recipient. We are talking about the recipient. If you fail to pay, I am not talking about the supplier here. I am talking about the recipient.
Recipient is not eligible.
So retention money is not a failure to pay. It is a contractual obligation. So to that extent, even if the retention money does not come to you, or rather it is not paid by the recipient, there is no need for reversal, is my viewpoint. Definitely this will be put to test.
Now incidentally, so if any entry is not coming 2A form, you said I have to reverse.
Yes, that is a different thing, sir. Yes.
If I have to reverse, whether I should pay,
2 year வரல அப்படினாக்க reverse பண்ணணும்.
whether I should pay interest from the date it has been taken credit, or I can just simply reverse the ITC amount.
No, sir. If there is a difference between 2A and 3B, you have to reverse with interest. From the date of availment, you have to reverse till the date of reversal. With interest.
Then
This interest, sorry?
Then can I make a complaint to the
Yes. I think that will be covered by Mr. Subramaniam. I mean, in the proposed, forms scenario.
Sir, but I think getting it in 2A is not mandatory at this point.
Sorry?
Getting it reflected in 2A is not mandatory at this point.
No, that is not mandatory. But as far as the officer is concerned, it is not an eligible credit, because section 16 says that the supplier has to pay tax. If the supplier had paid tax, it would have appeared in your GSTR 2A, which means the supplier has not paid tax, which means you are not eligible. That's all.
already GST officer is sending notices.
Yes. All that is concretely fixed. Whatever has been the government's experience from the service tax era, all of that has been plugged. All of those loopholes have been plugged.
But one of the major, the backbone of GST is when credit must be given to the recipient, then only the party can take. But if you see the recent Supreme Court judgment on Arise India Limited, where they clearly said the ITs is a right, not the privilege. So even if it is not, the credit has not been given, you are entitled to take the credit. This will completely shake the GST law, because GST law is also running with the same principles, and Supreme Court has also dismissed that PAL, and so the same scenario is applicable in GST also.
Sir, if your supplier is not paying, then obviously there is no question of it getting reflected in GSTR 2A. If you read the series of sections from 40 to 50, all of that will be very clear that only if you get, you are eligible.
No, I'm not asking, I'm not standing within GST law. I'm
but within the GST law is what we have to look at it, right? I mean, the legal ambit is there. The law says very clearly that the supplier has to pay.
But if at all somebody faces a problem because nobody is going to the court before 30th or 20th of October because nobody, they are trying to collect it from the party.
Correct.
But somebody is facing any problem if they don't receive it, if there is any possibility of non-recoverability of ITC, then they can very well approach the court because there is a strong...
Yes, you can approach the court, but I'm talking from the realm of the GST law. From the viewpoint of GST law, there is no scope.
My point is, I can...
You go beyond the GST law. That's what you are trying to say, that you are trying to put a writ. Article 226. That is a different perspective altogether.
Well, if I may add, this particular judgment that input tax credit is a right was also there in the earlier law. 2006 itself the thing came, and the concept of matching of credit was upheld. After it was struck down, it was upheld in Maharashtra VAT in 2012
Yes.
or 13.
There are several decisions, sir.
Exactly. So I think what you are saying is proper. Even after
Because as far as the court is concerned, they will also look at the loss to the exchequer. That is something that they will also view seriously. Any decision cannot be given in favor of the assessee simply. It has to be viewed in the perspective of, loss to the exchequer also.
We get a lot of bogus transactions.
I think MBAT judgment will cover this particular specific point.
And also more importantly, as sir pointed out, it will weed out all bogus transactions. Very important. That matching concept is quite important. I think Mr. Subramaniam will touch on that. 1 minute just. If there are any further questions on this, we'll take this up, or we'll hand this over to the next. Okay.
So with respect to this over 180 days payment, what happens in the case of a supply to the SEZ where a refund application has been made?
Sorry, sir?
I have made a taxable supply.
Okay.
I have not got the payment within 180 days.
You have made a taxable supply, you haven't got the payment, okay?
I have not got the payment.
Okay.
And it is a IGST.
Okay.
I supplied to the SEZ.
Okay.
I preferred a refund.
Okay.
What happens in this case? I will not get the refund also.
No, sir, that is irrespective. That's a different, sir. That is entirely different. That's on the other side.
He talks only about the recipient.
I think they're running short of time. So I'll definitely will take this up or take up all the questions towards the end. Certainly.
Srinivasan has indirectly indicated he should be available till the end of the session. Thank you, Srinivas. Now, initially we made a remark about the respective speakers, and Srinivasan set the very good tone for the other two sessions also. Thank you, Srinivas. And in every session, the 72 what 4 or 5 years back what Raju reminded about the old indirect tax certification course, and recently concluded 2 months back the advanced course. Only 60 seconds. I request Rajiv to give a summary of whatever he has learned. Please come, Rajiv, only 60 seconds. Microphone. 60 seconds.
Yeah, sure. Very good evening to one and all. Thank you so much for the opportunity to summarize all the today's speakers' points. And mainly we are talking about input tax credit. Whenever I talk about input tax credit, I say that is the most important topic because there are almost 70 to 80% of the litigations under the old regime is from input tax credit. So it is a highly litigative area. There are Mr. Srinivasan has touched upon many litigative prone areas. If everybody will have their own viewpoints on issues. See, for example, if I say something, he can say something because it is a newborn baby, and nobody knows exactly what is the character of this newborn baby. So hopefully, these things will settle down over a period of time, and there are good materials issued by the Institute of Chartered Accountants of India. Our own institute has issued a background material, so which will be a good resource for all the people who would like to learn the GST from the basics. And let me thank the speaker for enlightening with more points. And then the main aspect which I learned is rent a cab and how it has to be done and all. And I would like to add a couple of points. If the speaker gives 10 minutes, I would like to add a couple of points also. Okay.
60 seconds.
Okay. So then I will not get into it. Okay, fine. So thank you so much. It was a great presentation, and then probably you may have to go through all the background material so that it will be more informative. And then once again, let me thank the speaker on behalf of all the viewers. Thank you.
Thank you, Rajiv. Thank you. And we'll take the pleasure of together honor our speaker, Mr. Srinivasan. We have a very special guest from Nagarkoil, Mr. Aragappa Pillai, on the stage, please, to honor our speaker, a very senior practitioner on indirect taxes from Nagarkoil. Only exclusively has come there because his daughter is studying a chartered accountancy course. Friends, give him a very big round of applause. Also for Mr. Srinivasan. Please on the stage, please. Friends, we'll break for 10 minutes. We'll have a hot pongal and a cup of coffee and tea. We'll assemble back for the next 2 sessions. Dinner with the help of this reconciliation. So that reconciliation we are actually well settled because of the past 4-5 years of the routine. Now this right hand side, through the GST law, they have made it mandatory. Books of account is yours. GST returns, what you file, is also yours. So you try to match both. Meaning, what is the turnover in your books of accounts? What is the turnover in your GST returns? Match that. There are reasons why both may not match. Innumerable reasons. Maybe reason number 1, if you have multiple registration and there is a stock transfer, under GST, a stock transfer is considered to be a sale for the sender, and for the receiver, it is a purchase. So, definitely, if I take a PAN-wise turnover and number-wise GST number 1 and GST number 2 for the same PAN, the total turnover under GST number 1 and GST number 2 put together may not be the total in my books of accounts. So I need to knock off. So generally this kind of reconciliation is very common in corporate accounting, because there they will have this concept of independent accounting with respect to every branch or every unit, and any transfer, because they will have the transfer pricing concept. They want to show the profitability of every unit, and there the corporate office will try to knock off before they do the consolidation. And this reconciliation, for the first time, they are making it mandatory to certify also. I repeat, to certify. And again, it is not new. Why? Because cost accountants here will appreciate one thing, that under the CARR, the company CARR rules, the cost accounting record rules and the company's cost audit report rules, both makes it mandatory that the costing profit and the financial profit has to be reconciled, and it has to be certified by the cost auditor who is appointed under the Companies Act. So it is akin to that, very similar to that, where first time reconciliation, and already if you look at the cost audit report rules, the cost audit report also has to be uploaded, the reconciliation statement also to be electronically uploaded. So this is nothing new as far as that. From the government perspective, making a reconciliation certified by, there it is only a cost accountant will do, here a chartered accountant and a cost accountant will do, or a cost accountant will do. But my topic here is not per se discussing left hand side or right hand side. My topic is discussing how these two are bridged. where all it is like picking some information from GST and then sprinkling in the income tax return. So that's where the real challenge is. So take data from GST return and then fill it in the income tax return. So quite interesting mechanism they have brought. Let us see what are all the changes they have brought and then how we need to tune ourselves, understand ourselves to these changes. I'll come to these things a little later. First I'll share with you, I'll only take a maximum of 30 minutes because exactly by 7:15 I'll hand over the mic to R. Subramaniam. Point number 1, ITR numbers they have changed. I will not go into it. We had 4S in the previous year. It has now become 4. The 4 has become 3 now. So therefore, we have only ITR 1, 2, 3, 4, 5, 6, 7. Now 1 and 2 is non-business. 4, 5, 3, 4, 5, 6 is business return. Now I will only pick up ITR 4 alone. ITR 3, 5 and 6, 3, 4, 5, 6, 4 I will discuss now. 3, 5 and 6 together I will discuss what are all the main changes. The first change with respect to ITR 4 is, this is a return exclusively applicable only for those who come under the presumptive taxation. Only presumptive taxation. They say no need to maintain books or accounts, but in cell number E9 and E10, cell number E9 and E10, you have to fill up first time we are seeing this, you have to give the turnover of and the GSTR number. E9 is GSTR number, E10 is the turnover or the gross receipt as per the GST return file. Here itself we will get the first distorted number because the registration starts from, GST starts from 1st July 2017 and the turnover from the GST return means it is only 9-month turnover what you capture. Now the presumptive taxation, whatever you fill up in the schedule BP, you will actually take the annual turnover and on that we will calculate either that 8% or whatever the coveted percentage. So therefore, here itself fundamentally there will be a difference where I believe maybe wherever there is a proportionately maybe 9-month turnover and 12-month turnover. So it is 75% and 100%. Whenever the margin of safety, we used to say in costing, or that margin of error, if that percentage is little bit higher or lower, that itself will throw the exception. Maybe that's the first time we need to have as this as a working note or as a worksheet to reconcile between my GST turnover for 9 months to my GST, to my total turnover which I disclose in my ITR number 4. So I will not go into the detail. I will come to the, this has no sanity. It is only my understanding with respect to technically what is it. My GST turnover will always be excluding taxes. So I will add taxes. Plus I will also add the 3-month turnover which is not there in my GST returns. So thereby I will try to match my book turnover with my GST turnover. So, and of course reconciliation alone is one particular topic. Indirect Taxes Committee of SARC, we have thought it fit to discuss at length and breadth, not as 1 or 2 sessions, but at length at large, and come out with a collective understanding of the professional's experience, coming out with a format, and not also that, to complete a GST audit in an electronic mode, not an offline mode, but an online mode where you collect the data, convert that into a spreadsheet data, and then try to collate the data and then try to complete the GST audit at the minimum most time possible. If we try to do a audit around the computer, not audit with the computer, definitely the time lag the difference will be there. We can see the difference. And we are working out, and also we are in discussion with some of the experts. We'll come out with some very unique modules on reconciliation and GST audit alone in the days to come. Now, since I have gone to ITR 4, I will also continue to another 15 more new line items, E9, E10. From E11 to E25 they added line items. Now, technically if you look at 139.9F, we must actually give only 4 data from balance sheet. That is, I have to give debtors, creditors, stock and cash balance. Debtors, creditors, stock and cash balance, and another 4 of P&L account. That is turnover, gross profit, expenses, net profit. So this actually gives me a complete understanding of, it's a summary of my books, or in one shot, a single entry summary. Now, if I project this 4 data in E11 to E25, first time I am witnessing a list of additional information. This is an indication to us that in the coming February 1st, possibility of an amendment to 139.9F is there, because they are asking partners or members' own capital. This is liability side. Secured loan, unsecured loan, advances, creditors anyhow is part of the requirement. Other liabilities, total liabilities. This is liability side. Asset side, you must give fixed assets, inventories, debtors, balance with banks. I repeat, balance with banks. Cash in hand, loans and advances, other assets and total assets. Somebody questioned me, what if my E17 and E25 total is not tallied? Because anyhow I don't maintain books or accounts. So this total and that total is different. My understanding and my view is, you can give, you need not give, but statutorily we need to give only 4, which is E15, E19, E20 and E22. Right. Now coming to ITR 6. This is actually, there is a film of Rajinikanth, almost a film will about to be end. At that time there will be one English, there will be one Tamil sentence there. Idu mudivalla, inidhan arambam. So like that in ITR 6, the last but one schedule, is schedule GST. ITR 6 is for corporates. ITR 6 is for corporates, not for even LLP. LLP is ITR 5. Now here they are slowly, silently, they started to ask details, and this is nothing but the same table is replicated in the schedule to the new tax audit report. Appadiye. So that is why whatever new things that is there in ITR, it is அது ஒரு சுனாமி எச்சரிக்கை மாதிரி ஒரு amendment வரப்போறதுன்னு அர்த்தம். Okay. So schedule GST, if you look here, and they say very simple, this is applicable, schedule GST applicable only for those assessees not liable to get 44AB audit. Chumma 2 crore below, if your turnover is there, just give me this data. So there was a comfort actually, okay, anyhow I am a company, I am bound to maintain books of account as per the Companies Act. So therefore these information they are asking, which will be anyhow we can take from books of accounts. This was a comfort. But this analogy they have extended to tax audit report, particular statement annexed to the tax audit report, same table they have just copied it there, where they say tax audit is applicable for corporates as well as non-corporates having turnover above that limit. So therefore, this particular schedule 6, ITR 6 schedule GST is applicable for corporates having turnover lesser than the prescribed limit, and tax audit report statement showing particulars, that particular table, similar table, is applicable to corporates as well as non-corporates who have turnover beyond that particular prescribed limit. Now look at the table. This is where the real challenge is. Now the same table is there even in the tax audit report new format. Assessee is required to provide details of expenditure in form 3CD, whereby they need to provide expenditure, please underline that word, expenditure in respect of entities registered under GST and entities not registered under GST. Very good. But look at the table. It says what is the total expenditure incurred during the year. My understanding is you need to actually only fill one line to it. That means the entire P&L account total, you have to divide, cut the total into 4 pieces. Piece 1 is how much of the total expenditure is paid or related to entities. Maybe even accrued entry also will be there. Related to entities if it is not registered. If it is not registered. For example, rent paid to landlord who is an unregistered landlord will come under that part. Now, predominantly, assessee will say, sir, mottama ange potrunga sir. Right? My sense of fear is, this is actually a starting point of data capturing mechanism for the assessing officer. Oh, these are all the expenses relating to entities registered under GST. Anyhow, voucher vanda. Unregistered to the unregistered under GST, please give me the breakup of it. Now the interesting point is, every expenditure will have expenses relating to entities registered under GST, also expenditure to entities unregistered under GST. Now, not only registered under GST, please look at the another 3 pieces of the registered part. The workload, the information which we need to collect, and the kind of information. So definitely the books of accounts plays an important role, and also the vouching, the way the people account it, important. For example, the 3 parts, what they say, what is the expenditure relating to goods or services registered but exempt under GST. We have exempt under GST, for example, interest paid to bank or accrued interest to bank on working capital loan, term loan, so many vehicle loans, which is debited to P&L account, eligible as an expenditure but exempt under GST. It is not unregistered. It is registered but exempt. Specific exemption is there for interest. Please come to the second part. Relating to entities falling under regular scheme, regular registered entity and composition entities. So we have to see the difference between, okay, then a billa with GST, without GST. With GST, registered person. Without GST, registered person. So this is the audit goes now transaction wise. Rather than going for a sample audit, today it goes for a transaction audit. So unless and otherwise there is a concept which we bring in for all these audit entities, what we call it as a concurrent audit or parallelly auditing while filing the GST returns. These information for the first year will definitely pose a threat to time limit to complete one particular audit. Now, I have just zoomed in on the ITR. Please look at the ITR, expenses alone. That's the income side. So income side they have not bothered about it because it to provide only expenditure. So this I am not going into it. So thank God I need not go to the credit side, only debit side. Debit side paranga. Now I am leaving the opening stock, closing stock, purchases and my gross profit. Purchases also I must go where again the 4 pieces will be there. Now please go to all the other line items. Freight, stores and parts, power and fuel. Does it come under unregistered or registered or exempted? Because the entire P&L account total if you take, there is an anomaly here. What is the anomaly? The entire expenses, one portion will be covered under GST, other portion will not be covered under GST at all. So non-GST items also will be there in P&L account. So I need to first do a macro table, total P&L, what is registered GST, unregistered GST, non-GST total. And registered GST, unregistered GST, I need to again have a breakup of it. So power and fuel will not come, rents both will come, repairs to building may come, may not come also. So repairs, compensation to employees, is it will come under GST or exempted from GST? It doesn't come under GST, but we need to see the so many items. Please look at the item like leave travel benefits. Okay, on this there would have been GST payments. And we are actually, Mr. Srinivasan would have told that blocked input credit. This will come under the blocked input credit. So all these aspects, whether these expenses has a GST element or not, number one. Number two, whether it comes under the non-GST item. So all this have to be taken. For example, superannuation, provident fund, gratuity, all these are non-GST. Insurance, workmen and staff welfare expenses, entertainment expenses, hospitality, conference. This I have taken not from any general P&L account, from ITR. So this is the category we need to actually classify in ITR. So the need to, compulsion to actually identify whether each line item, whether they come under non-GST or GST, they come under GST, whether it is under registered or unregistered. Advertisement, sales promotion, commission paid, royalty, professional consultancy fees, all this will come under GST. Hotel, boarding, lodging, GST item. Traveling expenses other than foreign traveling, GST item. Foreign traveling, conveyance, telephone, guest house expenses, club expenses, festival celebration, scholarship, paid. GST or non-GST? Gift, if it is given for a business promotion, it is actually a GST item, GST expenses. Donation, okay, this is anyhow it is to be added back. Audit fees, other expenses. My understanding is, of course, all of us will agree, many things we put only here. Actually, ஒரு statistics எடுக்க சொன்னேன் ஒரு பொண்ணை கூப்பிட்டு அம்மா போன வருஷம் நமக்கு everything is now in system that ITR and all other expenses-ல எவ்வளோ போட்டோம் to total ஒரு percentage சொல்லுமா ஸோ ஒரு half a day ஒர்க் பண்ணிட்டு அந்த பொண்ணு சொல்லுச்சு சார் 40% சார் 40% of expenses, this is in my office, I am openly saying, and I am sure in many places, because there will be so many terminology which doesn't fit. Like every time they will come and ask, sir, என் கணத்தை காணோம் சார், என் கணத்தை காணோம், லிஸ்ட்லேயே இல்லை, லிஸ்ட்டில் இல்லைனா 38ல போடு. Right. Bad debts written off. Okay, Mr. Rajiv will say, sir, non-GST item. Okay, so all this will come. So this is the place where your accounting, ITR and GST actually comes at a trisang. Right. Provision for bad and doubtful debt, non-GST. Other provisions, non-GST. Interest, okay, GST item exempted. depreciation, non-GST. So like this, we need to actually do an analysis. So I'm just giving a gist, I'm not going much in detail. Okay, now I'll come for the ITR 3, 5 and 6. Now ITR 3, 5 and 6, I'll just make it quite faster. They have actually brought GST into 5 paragraphs. Income, expenses, refund of GST, credit outstanding. On your sales, what is your output liability? On my purchases, what is my input tax credit? And what is my taxes which I have paid through challan? For example, through PMT 06 challan. So they are capturing these data. Now I have 2 choices of accounting. One, I will do an inclusive method of accounting. Another is an exclusion method of accounting. What is this inclusive method and exclusive method? If you read the guidance note on tax audit, both these are acceptable under the books of accounts maintenance. What is inclusive? My turnover will include taxes. My turnover will not include taxes. Simple. Now, what 99.9% of the assessees, what they will do is, turnover will be excluding my indirect taxes. Turnover excluding indirect taxes. Now, let me start from the input side. My purchase is 10 lakh rupees. On that 18% is GST. Then 10 lakhs I will debit purchases. 1 lakh 80 I will debit my input tax credit. So keep it separately in balance sheet. Because tax what I have paid, I will not go to V. Srinivasan's topic, unpaid 180 days, blocked properly paid. So then I am eligible for 1.8 lakhs input credit. Now, if I am eligible for 1.8 input tax credit, I don't debit that to P&L, I take to balance sheet. I keep there. Now my output, say if it is say 20 lakhs or say 15 lakhs, whatever the sales, on that my output tax liability, say it is 2.5 lakhs. Say 2.5 lakhs. So 2.5 lakhs, how do I do is, say if it is 20 lakhs and 2.5 lakhs is my output tax liability. 20 lakhs sales I will book in my P&L. 2.5 I take to my output liability. And output liability to my input tax credit I offset. So 1.8 lakhs I transfer to my output liability and input tax credit becomes 0 and my output liability 2.5 minus 1.8, 70,000 is my liability. That liability will be in my credit side of my balance sheet. And I will through a challan, GST PMT 06 challan, I pay 70,000 rupees, and when I pay the 70,000 rupees, my liability gets off. So it is debiting to that liability and crediting to bank account. So the only place where the tax is captured is bank account, nowhere it is captured. Now there are point to be noted here. They are actually asking, look at the para B here, please give the GST received or receivable in respect of goods supplied or supplied, goods sold or supplied. This particular paragraph was there even in the pre-GST era, where we used to have excise duty, service tax, VAT, sales tax and any other duty, tax or cess. We will not fill it up. The only place where we will fill it up is the credit outstanding in my balance sheet, which I carried forward, or my liability which I carried forward. Not beyond that, nothing is done. Now the same is extended here. Now I have an option either to fill this and follow the inclusive method, or not fill this, follow the exclusive method. Both are correct. But there is a small catch here. What is the catch? Now please look at the expenses side. GST paid, the expenses are 2 paras there. GST paid or payable in respect of goods and service purchased, that is input tax credit. Second expense is GST paid or payable to government through my challan. So this is also, we have para number 7, para number 36. Para number 7 is total input tax credit availed and offsetted with my output liability. 36, my output tax which I have paid through challan. This is what they are actually asking for. Now, I can totally ignore this, not fill it up. I am right in my approach. Now, even if I ignore it and I don't fill it up, the data is available at touch of a button for the department because it is all PAN based. Now, if I fill it up, well and good. If I don't fill it up, what are the issues? Now, what I perceive from all this is, number one, if my output liability is 25 lakhs and my input tax liability is say 18 lakhs, 7 lakhs I would have paid. Now, if you look at this tax liability and input tax credit and tax paid, it looks like an accounting thing, but there is a business sense in it. Now, what is the business sense? The moment there used to be accountants, there used to be business associates, there used to be business associates. When the accountant will come to file the return, ஐயா இந்த மாதம் ரிட்டர்ன் ஃபைல் பண்ணணும், எவ்வளோ இன்புட் டேக்ஸ் கிரெடிட் இருக்குது, ஐயா 25 lakhs இருக்குது, 25 lakhsக்கு என்ன சேல்ஸ் போட முடியும்? ஓகே, ஸோ அப்படி மேட்ச் பண்ணி அப்லோட் பண்ண இல்லைங்க, ஆக்சுவல் சேல்ஸ் சொல்லுங்கள், அதுதான் ஆக்சுவல் சேல்ஸ். Now, point is, if my turnover, I repeat, if my turnover, output turnover and my input tax credit, I match like this, my value addition is very thin. My value addition is very thin. That means from my pocket I don't pay tax. Now, if I don't pay tax from my pocket, now I want to declare profits. I repeat, I want to declare profits. Okay, now if I declare profits, we know how profits can be declared. Now, if I declare profits, now because it is not only the purchase and sales that is linked now with respect to GST, we have seen entire P&L account, entire accounts is now linked. So if I have to declare profits, that means value addition is there. If value addition is there, tax has to be paid. That means collected and paid. Through challan it must be paid. So, the silo information, the touch of a button, I will know from GST, from my electronic cash ledger. From my electronic cash ledger, appatama, the assessee will be exposed. What is the value addition he has made? Now, other side of the story is there. What is the other side of the story? Now, no. Why should I pay tax from challan? I could actually, I have made more additions in the form of capital assets and I have accumulated the input tax credit through the capital asset. Thereby my electronic credit ledger is more compared to my electronic liability ledger. So therefore, my value addition is captured there. But point to be noted, if that is the circumstances, there is an addition to my capital asset, so there should be a source which they should have declared through the balance sheet. So therefore, இப்படி வந்தாலும் லாக்கு, அப்படி வந்தாலும் லாக்கு. So very interestingly they have actually captured this. So my understanding is, these information, whether if we fill it up, we need to ensure these information we capture appropriately from electronic credit ledger, cash ledger and debit ledger. Now, I'll just share one more point and I'll close the discussion. I'll just borrow the point from Mr. Srinivasan because Mr. Srinivasan was discussing on the input tax credit reversal and block. We have a very challenging period in the coming days. Why? Because the GST audit, they make it very clear that there is a statement of particulars that has to be furnished, which is actually 28 annexures. And what I understand from this 28 annexures is this nothing but your GSTR returns heterogeneous data will be collected in a homogeneous format, and then it has to be presented, except for few annexures. And one annexure is the input tax credit eligible. The eligible input tax credit, that is where actually Mr. Srinivasan was about to sum up, because all his discussion actually flows to one particular table called, which is an annual table called as the input tax credit availed minus ineligible and input tax credit eligible, which is actually to be done transaction wise, cannot be done on a sample wise. Now with this brief, I will thank each and every one of you for being very, very attentive and very focused. And this is only a primer session. I believe more such session on this will throw much more light, and we need more illustrative, with more illustrative examples like a workshop model exclusively on the 28 annexures, exclusively on demonstrating with a live laptop and with the data, with the GSTR data, how the GSTR data have to be imported to a spreadsheet, and how the heterogeneous data have to be culled out using various Excel tools, so that the annexures to the GST audit report can be done within, I believe it can be done within half an hour to 1 hour. If you have the appropriate Excel spreadsheet skills, the data analysis skills, and the data is available in your hands. So friends, with this brief, I thank you one and all. I will be open for any questions post Mr. Subramaniam's presentation. Like you, I am also very keen on what is the new format, the new GSTR format in store. Of course, we are going to have a 4-hour session on new GSTR formats. I repeat, a 4-hour session, morning from 8 o'clock to 12 o'clock, or you please suggest, if the time is so early, we'll have from 9 o'clock to 1 p.m. It will be a 4-hour breakfast session only on the new GSTR forms. Before you leave the hall, you can give your suggestions. Another week or two, we'll announce that particular program. So over to Mr. R. Subramaniam.
Thank you, GKR. First session there were a lot of questions. Second one is very new and relatively very dry than the first one, because first one was very familiar with respect to credit, reservation, calculation, this, that, so many things. I don't think anything to be summed up. Still, I requested Madam Sarda to come and share her views with respect to the presentation made by Mr. GKR.
So I think more than the subject being dry, I think it's more because people over here are all indirect tax practitioners, and the subject that you are touching upon is a combination of direct tax and indirect tax. So 50% of it, yes, it goes into the head, then 50% of it goes above the head. Am I right? Okay, I think it's a very interesting topic as such, and he did a great justice. Okay, and couple of points which I think we are taking away as part of this particular session is, one most important thing is, yes, we definitely welcome that there is a good spreadsheet and all that which is being developed, but there is a concept called GIGO, garbage in, garbage out. So the fundamental things what we are actually going to learn after this year's GST audit and income tax audit is point number 1. The most important thing is how good is our books of accounts. I think that is what is GST all about. Bringing discipline in one's way of doing the business. Correct? So a simple example, we spoke about unregistered dealer, and we also spoke about exempted. So we all know that for GTA we are paying tax under RCM. But how many of us are bothered to understand whether the GTA is registered or not? Not really, right? So there are a lot of things which we are actually not capturing data effectively at the base level. So that is something which I foresee to be broadly improved upon in the year 2019 after we go through this GST audit and ITR. I mean, and income tax audit. So another thing, I think in VAT we had this 1920. And during the introduction of GST, all of us discussed and all of us we concluded that there is no specific section which is relevant, which is as good as what is there in VAT 1920. But I believe that is being indirectly tapped through this way of reconciliation between GSTR and ITR. Right? So we actually conclude upon whether there is a real value addition or not. Not merely at the transaction level but also at the business level. So another point, about the way in which we have been filing the GST return. When we are filing the GST return, the two main aspects that we are looking at is, one is the outward supply, what is our tax, and the other one is eligible ITC. How many of us are really bothered to understand the other sections wherein it's not actually related to the taxes, where you go ahead and declare your unregistered inward supplies relating to non-taxable, I mean the exempted ones or non-GST. Are we really disclosing what is our petrol expenses? Do we know that petrol expenses need to be declared as part of GSTR 3B? I don't think all of us are disclosing that, right? So there have been a lot of cases where I have seen that the companies have been handling GSTR on their own, and then they come to us at some point, and that point of time we go back and unearth what are all the mistakes that they have done, which is just something apart from their regular tax payment. I think we will definitely unearth more such points when we actually go through this GST audit and income tax audit. I think it's a brilliant session, sir, and we have a lot of takeaway points as part of this session. Thank you so much.
Thank you, Sarada. Now, before handing over the proceedings to Mr. R. Subramaniam, may I call upon Mr. Sulil Kumar. Sulil, Vama, please hand over a memento to our friend. உண்டுப்பா கிடையாதா ஏன்பா எனக்கு வேணாம்பா ஓகே சாரி சுனில் எனக்கு கொடுக்கும்போது வரேன் இல்லை ரெக்வஸ்ட் மிஸ்டர் சுப்ரமணியம் டு கம் ஓகே எஸ் சார் நோ staff and recognition of staff.
At the outset, I am thankful for the Indirect Tax Chairman for giving me an opportunity. It is my pleasure to be here today. I heard Mr. Srinivasan and Gopal Krishna Raju. So I will take only half an hour or 30-40 minutes of your time. So these are all the forms that they are going to come from April 2019 or November 2018, I don't know. But these are all the forms and the procedures is given to the public for comments. So there are a lot of comments, there are a lot of issues also there. I hope that the government will also take into consideration of all those issues and then they will finally draft the new forms. So the first the 28th meeting they have designed what is a form, how they are going to deal and design the forms. First they are dividing the assessee in two categories. One is a small taxpayer, another one is a large taxpayer. Who are all large taxpayer, who are all small taxpayer is also being spelled out. All taxpayers except a small taxpayer, composition dealer or ISD, input service distributor or non-resident dealer, these are, other than these dealers, those type of dealers, other dealers are large type of dealers. So that means small type of dealers, composition dealers, a person who is required to deduct TDS, a person who is required to collect TCS, etc. These are all the type of dealers, is a small type of dealers. For a large type of dealers, they fix the time date is 20th of the next month. Then they have to define who are all the small taxpayer. The small taxpayer, those whose turnover is less than 5 crores in the last financial year. That means a last financial year start from 1/7/2017 to 31/3/2018. Therefore, based upon the return filed by the dealer, if the turnover is less than 5 crores, then they are called small taxpayers. For the small taxpayers, they have to file the return only in quarterly, but they have to pay the tax monthly.
You see the turnover from July to
July to March.
or proportionately you are to take.
Yes, I will come to that. So therefore, this 5 crores, how to calculate? So 5 crores from July 1/7/2018 to 31/3/2018, or it should be an annualized turnover. So it says that you have to calculate on annualized basis. That means if my turnover for 9 months is only 4 crores, that means 4 crores divided by 9 into 12. If it exceeds 5 crores, I will become a large taxpayer. If it is less than 5 crores, it is a small taxpayers. So it talks about only the return filed from 1/7/2018 to 1/7/2017 to 31/3/2018. Which return? Whether it is based upon the monthly return, or we know that whether it is possible for us to revise 3B return. Is it possible to revise the 3B return? What we are doing today? If my sales is missed in the month of June 2018, what I will do? How I will rectify? GSTR1. GSTR1 will you make the payment? No. How you will make the payment then? So that means in the month of March 2018, if I commit some mistakes, suppose assuming that I didn't include 50 lakh rupees of turnover, what I will do? That means in the month of April 2018, I will add this 50 lakh rupees. So therefore this 5 crore is to be calculated from 1/7/2017 to 31/3/2018 based upon the last return filed, or it should be calculated based upon my annual turnover, or it should be calculated based upon my books turnover, which is not clear. Moreover, yes sir.
Initial preamble what they have given for 3.5 or 4 pages, there they have given that this turnover we need not calculate, the machine will automatically.
That I will come. Sir, we know how machine will operate. How it operated from 1/7/2017 to 31/3/2018, we know. Say, I will tell you a lot of the system. Say sometimes it says that the system will declare who are all the small taxpayer, who are all large taxpayers. That we will check it up. So therefore this is a first question. The second question is turnover. Whether the turnover is defined in the Act. The aggregate turnover is defined. The turnover in a particular state is defined, but turnover is not being defined. So therefore this will be the issue for us. how to identify the small taxpayer and the large taxpayer. The next important question is a nil return. Say in a particular quarter, I have no output tax liability, no input tax credit, and no payment of tax at all. Then in such a situations, what I have to do? Today we are filing 3B nil, correct? But here also it says, yes, you file quarterly nil return. But at the same time it says, for each and every month, you have to send me the SMS saying that your turnover is nil. Therefore, in a particular quarter, April, May and June, once June is over, July 10th, I have to file my return. And then the April, May, I have to send the SMS saying that my turnover for April is nil, May is also nil. So that is the requirement under the new procedure. Small taxpayer, which we have discussed. But the small taxpayer, they have to file a return quarterly, but they have to make the payment every month. They have to file a return quarterly, but when they have to file, whether they have to file within the 10th of the end of the quarter, or they have to file 20th, which is not being as clear. But for a large taxpayer, it is very clear they have to file it before 20th of the next month. This is very, very important. Continuous uploading. There would be a facility for continuous uploading of invoices by the supplier. So the supplier, he can upload the invoices on day-to-day basis, no problem at all. Once he uploaded the invoices, what will happen? The recipient side, that is one facility is called viewing facility. The recipient, he can view whatever the supplier he is uploading. So based upon that, the recipient can take the credit. So one, the supplier he has to upload on continuous basis. The recipient, he can view based upon the facility given by the department, and he can also take the credit based on the viewing facility, based on the name, and his name will be there, his purchase will be there, everything will be there. Based on that, he can take the credit. But here very, very important is the supplier, he can, whatever he is uploading up to 10th of the next month alone, the recipient can take the credit. So that means for the month of April 2018 or 19, the supplier, he is uploading the details. It will be available to the recipient. But if he upload up to 10th, whatever he uploaded up to 10th, that will be available to the recipient. Therefore, the recipient can take the credit. What will happen on 11th or 12th or 13th uploading? These are all the uploading that will not be available for him for the next month. It will be available for him for the succeeding months. So therefore, the supplier, he has to upload the details. Once he uploaded the details, so based upon that, he can take the credit. Here very, very important is, he has uploaded the details, all the details he is uploading, but he has not filed the return. Then what will happen? The recipient, what he will do, based upon the uploaded by the supplier, he will take the credit. At the same time, the supplier, he has not filed the return. Then in such situations, they say that we will collect the tax from the supplier. So they will collect the tax from the supplier based upon the data uploaded by the supplier. So therefore, they will take a recovery proceeding against the supplier. Only uploaded invoices would be a valid document for availing the input tax credit. Invoices uploaded by the supplier by 10th of the succeeding month shall auto-populated in the liability table of the main return of the supplier. The supplier is also required to pay the tax based upon the auto-populated details. So the next important is the viewing facilities. Therefore, based upon that, he can find out whether the supplier is uploading the details one, whether he is paying the tax also, whether he is filing the return. So all those things which can be verified through the viewing facilities. Recipient can check whether the tax liability on the purchases made by him has been discharged by the supplier. So therefore, this is a very important amendment or very important welcome move. You can check whether the supplier paid the tax, whether the supplier is filing the returns or not. Viewing facility shall also show the trade name of the supplier. That's also very important.
This can be available only at the time of due date.
Yes, sir.
For the purpose of my taking ITC,
Hmm.
he has to make the payment on 20th.
Yes, sir.
I have to make my return on 20th. By the time I should take my ITC.
Okay.
So if he has uploaded but he has not filed made the payment, there will be no only after 20th.
I will come to later, sir. There is one recovery proceeding to the supplier, not to the recipient.
You will still be allowed ITC, they will recover from the supplier.
From the supplier.
Because he committed.
Yes.
If the supplier is absconding, then they will come to you. That point is also there. So you have to keep a watch on the supplier, whether he is there or not.
Depends on your understanding with him. Again.
So in the transition phase of 6 months period, what the government says that based upon the self-declarations, based upon the self-declaration of the recipient he can take the credit. The recipient can take the credit. Suppose if he is having all the invoices, but at the same time it is not being supplied by the uploaded by the supplier, then in such a situations, self-declared basis, the recipient can take the credit. Invoices uploaded but return is not filed. Here is very, very important. Invoices, I am uploading the invoices but I am not filing the return. In such a situation, the recovery proceeding will be initiated against the supplier after allowing for a reasonable time for filing the return for payment of tax. So therefore, once the invoices is uploaded, then it is his liability. Therefore, the supplier has to discharge. So this is very, very important. Unidirectional flow of documents. The supplier is uploading the details, but sometimes what will happen, the supplier, if he is not able to uploaded all the invoices, suppose if he is missed 2 or 3 invoices, in such a situations what will happen? So I am having the invoices in my hands as a recipient, but the supplier, he has to upload all the invoices, but he has not uploaded the invoices. But I am having the original copy of the invoices. In such a situation, can I claim the credit or not? I can claim the credit. The government says you can take the credit, no problem at all. But at the same time, you please follow up with your supplier for 2 months. You say that these are all the invoices. I am having original. You only supply to me. These are all the details. You please rectify. If the supplier is not able to rectify within 2 months, then the act says I will recover from you. And it also says that in certain such situation, the recipient, he can enter, these are all by missing invoices, along with the supplier GST number. Then in such a situation, the supplier, he knows, these are all the missing invoices reported by some other recipient. Therefore, the supplier immediately, whether he has to accept it or reject it. If he accepts it, then he is liable to pay the tax the month in which the invoices is raised. That's very important.
So, but in the purchaser's hand, the ITC will continue to be available.
Yes, sir. Yes, sir.
So that is a tool for working capital for him. You can use it as a tool for working capital management.
It is only for a period of 2 months. It is only for a period of 2 months.
Interest will be paid.
Interest you have to pay.
But without any facility, I am enjoying the working capital.
Therefore, the invoices, debit notes uploaded by the supplier on the common portal, it shall be a valid document for the purpose of claiming the input tax credit. Invoices, debit note which have not been uploaded by the supplier and on which the recipient has availed the input tax credit is called a missing invoices, which we have discussed. Such a missing invoices are not uploaded by the supplier, 2 tax period is allowed, then in such a situation it will be recovered from the recipient. The recipient also, he can enter in his portal, these are all the missing invoices, so that based on that the supplier will act.
So at some point of time, the registration will be cancelled. It is not collected within the particular. That was the original model law. registration will be cancelled if they are not able to recover. The threat was there to the assessees.
That is not under the GST law, sir. Now you are talking about the model law, correct?
Under the model law, it was brought. I don't know if it is continuing.
It is not there, sir. Missing invoices shall be reported by the supplier in the main return for any tax period with interest and penalty. So therefore, suppose assuming that the supplier he has to uploaded all the invoices for the month of April, but he misses certain invoices in the month of April, and then the recipient he waited for 2 months, and then he uploaded what are all the missing invoices. Then in such a situation, the supplier liability will start in the month of April, and he is liable to pay the interest from the April onwards.
Can I report
Yes, sir.
invoices without taking ITC?
Yes, sir.
Can I report missing invoices without taking ITC?
Say the Act says the first 6 months you can take even based upon the self-declared basis. You are eligible to claim the credit.
That's correct. So we say that after two tax periods.
Yes, sir.
If it is
You
not
2 tax period you can delay, and then you can follow up with the follow up with the supplier. If the supplier is able to rectify it, no problem at all. So otherwise, what you have to do? You have to report it is a missing invoices. Then the supplier, it will be available to the supplier. The supplier then either he has to accept it or reject it.
No, what I mean to say is, instead of paying interest unnecessarily, the first month itself invalid as missing invoice if it is not reported.
Okay.
I will not have an ITC.
Okay. You are talking about recipient angle or supplier angle?
Recipient angle.
Recipient angle, supplier.
Supplier is somebody else.
Yes.
So I will not have an ITC.
Okay.
If the invoices are missing,
Okay.
I will report them as missing invoices.
Okay.
So afterwards,
But you have to match it lesser. You have to, the supplier will in any way, he will upload the invoices, you know. The supplier, he will upload all the invoices.
No, what he says is only with regard to missing invoices.
Okay.
He says he doesn't want to take the input credit till the supplier uploads.
No problem, sir.
If you want the invoice, you claim.
That's all.
That-
You cannot report it like that. You can keep it pending.
Sir, there are chances for pending, rejection. I will come to that.
Say it doesn't come to you.
Yes, sir. This is an offline tool, so you can extract whatever the details you want from the offline. Recovery of input tax credit. This is very important. So there won't be any automatic reversal of input tax credit at the recipient end, where tax has not been paid by the supplier. But section 16 says that if the tax has not been paid by the supplier, then you have to reverse the credit. But here, the government says you are not required to reverse the credit. The government further it says, in case of default in payment of tax by the supplier, recovery first shall be made on the supplier. And in some exceptional circumstances, that is like missing of taxpayer, closure of business of supplier, or supplier not having adequate assets, there is an intention between the supplier and the recipient to evade the tax. In such a situation only they will come to the recipient. So that means they have to change the entire law. So that is why that the proposed amendment is there. Based upon that, this form is prescribed. So therefore accordingly they have to change the law and the rules. So here, even if the supplier not paid the tax, first they will recover the tax only from the supplier. And if the supplier itself is not available, then in such a situations, they will come to the recipient. So therefore, this is also a welcoming move. Locking of invoice. This is a new concept. Facility for locking of invoice by the recipient before filing the return by him. So supplier uploaded the invoice. Recipient also viewed the invoices, it is correct. Therefore, both they are locking. That's all over. After that, no amendment is possible. Suppose if he wrongly locked, what will happen? The supplier uploaded the invoice for 1000 rupees. The recipient actually purchased for 1 lakh rupees, but he wrongly locked. Then in such a situation, the government says no amendment is allowed. Then what you have to do in such a situation? I wrongly locked the
excess ITC.
Any view?
Excess ITC will
You
be.
can unlock it. Either you can unlock it.
Unlock is not possible.
No, no. They subsequently they are talking about unlocking, sir. There are some.
I will come to that. I will
there are
come to
some
that.
confusion there.
I'll come to that.
Otherwise, you want to pass a debit note or credit note.
That's all.
That's all.
So you have to pass and credit note, so to that extent, and then credit note or debit note, and accordingly you have to discharge the tax liability. Deeming locking of invoice is also possible. What is deeming locking? Deemed locking.
If you don't lock it, it is deemed that you are.
If I didn't reject it, if I didn't keep it pending, then in such a situation it will be called as deemed locking of invoices. Therefore, based upon that also you can claim the credit. Next is rejected invoices, where the GST of the recipient is wrongly filled by the supplier. The invoice would appear on the viewing facility. In any way, it will come to the viewing facility of the recipient. Then in such situations, what he has to do? Instead of Saravana stores, Super Saravana store. GST number different, but it should go to Saravana store. But the viewing facility of Super Saravana store la varudhu. Super Saravana store, what they have to do? It will be in their viewing facility, correct? Because I only punched their GST number. Instead of Saravana stores, I put Super Saravana store, that's all.
Two options, sir.
Then in such a situation, a person who is a recipient, but he is not an actual recipient, therefore he is not entitled to the credit, correct? First thing is, he is not entitled for the credit because he has not purchased the goods or services, he has not received the goods or services, therefore he is not eligible to claim the credit. The second important is, he has to reject the invoices. He has to reject the invoices.
It's a free credit available, I will take it.
பண்ண மாட்டாரு அப்படின்னா அதுக்கப்புறம் அந்த 180 டேஸ்ல ரிஜெக்ட் பண்ண வேண்டியதான், ரிவர்ஸ் பண்ண வேண்டியதான்.
After that, he will pay interest, no problem.
Yes, there will be definitely an accommodation angle coming in. Definitely there is an accommodation angle coming in. Our brain talks, no?
Finance man needs money 1 rupee today, not 10 rupees after 1
Think
month.
about it whenever the
After the damage is done.
exactly. Once their credit flow is better,
giving an
at that point of time
opportunity.
they'll reverse everything.
Especially group companies.
Exactly.
Regular pattern will make the department to be more.
Yes.
Once in a while it happens by mistake or secret. As a pattern it happens.
இல்ல சார் அதுல கூட என்ன சொல்லுவாங்கனாக்க தெரியாம ஒரு வாட்டி போட்டா எல்லா வாட்டியும் அப்படியே போயிடுது கண்டினியூஸா.
Yes, he said the accommodation.
The next important is pending invoices.
Maybe they have money to give.
Invoices which have been uploaded by the supplier, but for which one of the three following situations exists. The supplier has not been received by the. So invoice, he uploaded the invoices in the month of April 30th. But I received the goods or services only in the month of May 20th. Then in such situations, I keep it pending. Because I have to receive the goods or services. Where the recipient is of the view that needs amendment. That is, the amendment is required, therefore I will not take these invoices. I have to speak to the concerned supplier, and there is the amendment is required. Then in such situations, he can keep it pending. The recipient is not able to decide whether to take the credit or not due to various reasons. Therefore, in such situations, the recipient can keep these are all the invoices as pending.
Is there a time limit?
For sir, எல்லாத்துக்கும் section 39(9) sir, time limit. So September due,
Yes,
date of filing the return.
Quality acceptance will be a main factor for this.
Yes sir?
Quality acceptance.
Yes sir.
I may
Maybe.
receive, but subject to quality.
Correct.
That will play.
Quality issue, there will be more.
Quality issues. Yes. But time limit is there. The next important is deemed locking of invoices. What do you mean by deemed locking of invoices? I didn't reject the invoice, I didn't keep it pending. At the same time, I accepted for filing my return. I also claimed input tax credit. These are all the invoices. It is deemed to be locked invoices.
So only I have to identify invoices which I need to keep it pending and
Correct.
to be rejected.
Rejected.
Other
Right,
things
sir.
are all deemed automatically.
Yes sir, it's deemed.
Taken care of.
Suppose in small concern, if there are 1 or 2 invoices, then in such a situation, you can lock each and every invoices. Other than that, rejected and pending.
So the automatic handshake.
So now amendment. Invoices on which credit has been availed by the recipient, locked invoices, will not be allowed to be amended by the supplier. Invoices on which I have taken the credit, in those cases even the amendment is not possible. In order to amend the reported particulars of the, then you have to pass a debit or credit note. Unlocking of invoices. I locked the invoice, but there are certain cases I can unlock. Wrongly locked invoices shall be unlocked online by the recipient only subject to the reversal of input tax credit. So therefore the invoices is not belongs to me, but I locked it. There is no corresponding debit or credit note, but now I have to unlock these invoices. And in such a situations, I have to first reverse my input tax credit and then unlock the invoices. Then amendment of invoices. The amendment of invoices is very, very important. There is a separate return, amendment return. It is not like GST 3B here or GSTR 1. Here you can file a separate amendment return. If there is any mistakes that you have committed in respect of supplies or in respect of input tax credit, you can file amendment return. There is a separate amendment return, but you can file only 2 amendment return for a particular month or for a particular tax period. So in the month of April, I can file only 2 amendment return. Therefore, you must be very, very careful. So first you have to, what are all the changes you need? First you have to club together and then you have to pass one amendment. After that only one amendment is possible. Therefore, you must be very careful. The amendment of invoices may be carried out by the supplier where the input tax credit has not been availed and the invoices has not been reported as locked by the recipient. Then in such a situation, the supplier himself, he can go for the amendment return. If the invoices is locked by the recipient, no amendment is possible. If the invoices is locked, then no amendment is possible. Then in such a situations, credit note or debit note. Credit note issued on an invoices which is kept pending. Very, very important. Credit note issued on invoices which is kept pending. So the invoices I got rejected, I kept pending. Then in such a situations, I can pass on credit note. That credit note will be linked to the pending invoices, and then simultaneously the supply price, the supply value will come down, and accordingly you can upload the correct value of supply. Where the credit note issued on an invoice on which credit has been availed and the invoices is locked, then in such a situation the deduction in liability of supplier shall be subject to reduction of input tax credit by the recipient. So therefore, where the credit note issued on an invoice on which credit has been availed and the invoices is locked, then the recipient should also reverse the credit. HSN, now you have to prepare the HSN summary, table number 5. You are not required to report for each and every invoices, you have to give the HSN. HSN summary is possible. You can give the HSN summary. Return format, the return format will consist of only outward supply and inward supply. Only two main tables. Payment of tax, you have to make the only one consolidated self challan you have to prepare for the payment of tax liability. Amendment return. In case of wrong entries made in the return, there will be facility by filing an amendment return. The amendment return is a separate return. Amendment return is different than a regular return. 2 amendment return is possible for each tax period. Amendment has to be carried out within the time stipulated under section 39(9).
Is this similar to a reverse return?
Similar to revised return, sir. But you can revise it for a particular tax period 2 times. is like a revised return. Payment due to amendment liability. Suppose if there is any amendment, I file the amendment return and then immediately I have to discharge my tax liability also. But here you have to discharge the tax liability along with interest. Say for example, in the month of April, my total sales is 50 lakh rupees, but I reported only 48 lakh rupees, 2 lakh I missed. I came to know only in the month of June or July, based on the missing invoices or based upon the recipient follow-up. Now I am filing in the month of July or August the amended return, but this figure, this 2 lakh rupees figure, it will go to April month return and then it will calculate the interest also from April to September. So therefore the amendment return, you have to pay the tax along with interest. Yes? It will be auto calculated. The interest will be auto calculated.
Put the invoice date.
I think that is the best feature because currently only the late fee is auto calculated but not the interest.
Turnover can be reduced, sir, in amendment.
You can reduce it, sir, no problem.
But no interest.
That is why next. Negative liability. What do you mean by negative liability? So today if I file 3B. 3B in the month of April, my supply is 50 lakh rupees. And then I came to know that there is a issues. Therefore there is a credit note to the extent of 40 lakh rupees. Therefore my effective supply is only 10 lakh in the month of April. But this I have to adjust in the subsequent month, correct? In the subsequent month, if my sales itself is only 2 lakhs. Now today the GST or 3B, it says that not able to adjust this negative liability, correct? My supply is 5 lakhs, but I have to reverse to the extent of 7 or 8 lakh rupees. Then in such a situation, I paid 3 lakh rupees excess, but this is not being reported in or adjusted in GST or 3B. So this is being addressed under the GST law. The GST law says, addressed in the proposed amendment, it says that even you can upload the negative liability. So that means I can have a minus supply. So that if I have the plus supply in the next month, these will be offsetted. The remaining only I have to make the payments. So this is called negative liability.
But technically is it even required because there is an amendment to the original return itself and that feature is available. Should I actually bring in the negative liability to that?
Yes, sometimes if there is any negative, suppose assuming that in my earlier example, in April month itself if there is a negative liability because of amendment, what will happen?
No, but how that can even...
So that's why I am telling you. Say my supply is 5 lakhs. My supply is 5 lakhs.
Possible, sir.
My supply is 5 lakh rupees, or my input is in the month of April is only 50,000 rupees. But because of some amendment, my input is now 1,50,000 rupees. Then in such situations what will happen? My supply is reduced. In such situations what will happen? Earlier it was not addressed. At least now they are telling that now the negative liability can be taken. Higher late fee for amendment return. So that means for change in liability of more than 10% off through an amendment return, a higher late fee may be prescribed. So therefore, if there is a more than 10% of supply, if there is any amendment, then in such situations they are prescribing some late fee. Then monthly accounting, all reported liabilities as usual what we are doing today, the same has to be reported even under the proposed amendment also. Exports is very important. So in the exportable, you have to fill it up the shipping bill. Once if you fill up the shipping bill, then only it is easy for you to get the refund. So sometimes what will happen, my invoice may be in the month of April 30th. But my shipping bill may sometimes come in April 21st or like that. Then in such a situation, it is not possible for me to fill up the shipping bill. But what the proposed law says, shipping bill you can file at any point of time. So therefore, even if you are not able to file at the time of monthly return, there is a separate facility for exporters. The exporter, he can give the shipping bill at any point of time, he can feed into the portal. So accordingly it will transfer to the customs and then the refund will be processed. So the registered person can either fill this information at the time of filing the return even or after filing the return. But today under GSTR 1 you have to fill the shipping bill by amendment, correct? So but here it is not required. Even amendment is not required. There is a separate column for or separate viewing facility for this, therefore you can fill it up. A separate facility for uploading shipping bill and at a later date shall be provided to the exporters. On the informations of shipping bill completed, based upon that your refund will be processed. Subsequent amendment in export shipping bill table shall also be carried out through a separate facility on the common portal and not through the process of filing an amendment return. So therefore the amendment is not required. You can file it through the separate facilities. So this amendment data would also be transmitted to the customs portal. So integrated flow of informations. So all the informations from here from shipping bill, it will be transferred to the customs portal, and the customs portal they will check it up, and accordingly what you are getting the refund today, you will get the refund also under the proposed law. Supply side control is very important. For a newly registered taxpayer, this is very important, and a taxpayer who has defaulted in payment of tax beyond a time period and are above a threshold, they cannot, the uploading of invoices will be allowed only up to a threshold limit. That means if the supplier is a defaulter supplier, he is not making any payment to the government and there is a pending, then in such a situations, the system itself will allow him only up to certain limits, or sometimes the system will not allow him to upload the data. Therefore, it will not be available to the recipient to view the details. So therefore, the recipient will also ask the supplier what happened, whether he has to continue the relationship with the supplier, all those things he can decide. Recipient under the interest of the public money adequately protected. So therefore, this is very important. If there is a default in payment of tax by the supplier, the invoice of such a supplier will not be populated in the viewing facility of the recipient. Consequently, the recipient will not be allowed to claim the input tax credit. So that's very important. Profile based return. So today, if you go through GSTR 1, you have to go through from table 1 to all the tables, correct? But here, profile based return, I am dealing only in B2B. If you give in your questionnaire, I am dealing only in B2B, then only that column alone will come. Then you have to fill it up, file it, that's all. If you are a supply to SEZ only, then supply to SEZ, just you have to fill it up. If your questionnaire it is supply to SEZ, yes, then it will give only that table. You have to fill it up that table.
Similar to what is in 3B now.
Huh?
Similar to what is in 3B.
Yes, sir.
So this is month-wise? Or
month-wise. Suppose this month I have B2B only. The next month I have B2B and B2C or SEZ. Accordingly, you have to fill it up for the next month. You will ask whether you want to continue the same question in the earlier month or you want to change it. If you say change it, then you have to fill it up 2 or 3 columns, and then accordingly it will give you only 2 or 3 tables. That table alone you are required to fill it up, and accordingly you have to discharge your liability. Purchase information in the annual return, that we know, all the information you have to provide. This is very important, suspension of registration. If the dealer wants to discontinue the business, then he has to cancel his registration from the date of cancellation. From the date he filed for the cancellations to the date of cancellations, the dealer, he cannot file any outward supply. So this is in order to protect the revenue. These are all the annexure of supplies to main return 3A, 3B, 3C, 3D. So these are all not much importance. Quarterly return to small taxpayers who had a turnover up to rupees 5 crores in the last financial year. but they have to discharge the tax liability in a monthly manner. Types of forms, very very important. There are 3 forms. One is Sahaj. It is only for B2C supplies. Only if it is B2C supply, only 3 tables, you have to fill it up and you have to opt for Sahaj, and your turnover should be less than 5 crores. And if you have both B2B and B2C, then Sugam. There also your turnover should be less than 5 crores. You have to opt for this. Other than these 2 type of Sahaj and Sugam, you have to file a quarterly return like exports, SEZ. So all those type of dealers, you have to file a quarterly return. Quarterly return is also like monthly return, but you have to discharge your monthly tax liability, but you have to file quarterly once. Sahaj returns, small taxpayer often have purchased only from the domestic market and sales in the domestic market. B2B purchases locally and supplies either as B2C or B2B or B2B, B2C. They constitute a very large base of the tax base, and therefore to simplify the quarterly return, only B2C outward supply, the Sugam only B2B and B2C outward supply. Payment of declaration for payment of monthly taxes, you have to discharge the tax in a monthly, every month. Pending and missing invoices, that is not available in the case of a quarterly returns. The place of supply that you have to report, even if it is a small trader, but you have to report your place of supply, whether it is interstate or intrastate, that you have to report. Supply made during the tax period, input tax credit availed,
etc. Up to 2.5 lakhs, you need not report, that goes off now, is it?
Yes, sir.
Up to 2.5 lakhs. The traders need not give place of supply, that will go off now?
Up to 1.50 crores, HSN code is not mandatory. We are talking about B2C, yes.
Yeah.
That is not being.
So then he has to.
Yes, sir, he has to. He has to report now. So I think these are all the important instructions.
In terms of payment, the IGST, CGST, HST get filed and only one payment is to be made?
No, sir.
In terms of the making the payment, the form,
yes.
the challan also is getting changed as one only?
No, challan will prepare SGST, IGST, CGST.
Separately?
Yes. So these are all the very important forms. One is a regular form. Regular form is that monthly return that you have to prepare. Sagaj we discussed up to 5 crores, and it is only Sugam is also up to 5 crores. The quarterly return is also the 5 crores. Other than Sagaj and Sugam, the quarterly return is to be prepared. This regular is monthly return that you have to prepare. So these are all the returns which I don't want to discuss now. The time is almost 8:10. So thank you, sir. Thank you for your opportunity.
Friends, any questions that is from the new format? Anybody can question Mr. Subramaniam about this session. About the other 2 speakers also available as they committed. All the 3 persons are available. You can ask any questions now. Few minutes. First session la nariya kettinga, second la korava, ipo onume kekkam. Pudu format. Please ask question, then only different dimension of whatever.
April 2009.
Yeah.
Regarding
Krishnan Kelma.
I have this is with respect to Raju sir's presentation.
Still another normal last in the
So with respect to his presentation, there was a reconciliation you were talking about. So for the reconciliation purpose, when we do the reconciliation, we have to, unlike the VAT regimes and all, we have to not only look at the credit side, we have to also look at the expenses also. See, for example, gift given to the employees over 50,000 will come into your P&L account debit side. That is a supply, outward supply. So when we do a reconciliation of GST versus income tax returns or books of accounts, we have to not only look at the credit side, but also look at the debit side of the profit and loss account. Just a point which I would like to make.
Absolutely correct.
Sir, I think your presentation also had that. Had that.
regarding the ITC aspect, See, somebody has taken credit ITC in the month of April. It has not been reported in GST at 2A. After 4 months, it is reported. What is the question? Whether I should pay interest on it?
Sir, you have to basically, if it is put, if I understand this correctly, basically instead of, let's say, meaning you have taken, let's say, an input tax credit in GSTR 3B in the month of April,
Yes.
and it is appearing in your GSTR 2A in the month of August.
Yes.
For the interim period, you have to pay interest, sir. Quarterly interest is payable for the interim period.
So that means this has to be covered in the GST audit also. GST audit.
It has to be covered.
It will be, sir. Because you become eligible only in the month in which the ITC is available under 2A. 3B is our own declaration.
Actually, even in GST 2A, he reports invoice number and date as April.
Sir, if you actually see the month in which he has paid the tax, that would count, because section 16 subsection 2 puts a condition saying the supplier has paid the tax. So if he has paid the tax belatedly and if he declares it in a subsequent, let's say 2A, then obviously you stand to lose the interest part. That is where I am coming to.
When he pays belatedly, automatically the interest is going to be collected from him.
Sir, okay, please continue, sir. Yes.
See, when he says there is a sales pertaining to April, when it is coming in reported in GST in August, definitely he is going to pay belated interest for that particular disclosure. So that means there should be double interest.
No, sir. If, see, what will happen is, if he has not uploaded the April return and if he is now uploading the April return, it will come in your GSTR 2A for April only. You understood, sir? Suppose this is the month of August.
Yes.
The supplier has still not paid, still not uploaded GSTR 1 for April. If he pays the tax now and then uploads GSTR 1, then it will come in your GSTR 2A for April only. Then no problem. He will pay the interest.
Okay.
But if he puts if he puts that invoice in his GSTR 1 for August, you cannot backdate the invoice.
When he is putting in GST 1 for August, how can he put the date as April?
No, you cannot put, sir.
No, he is putting the, see, I am seeing my GST 2A, now regularly I am seeing.
No, normally it doesn't allow.
Filing the August month GSTR 1, he can incorporate the omitted invoices today, let's say April invoice, in the table number 4 itself. And it will reflect in his 2A for August month.
Yes.
Sir, we have, I don't know if we have tried a few instances, it is not allowing. If we put previous month, I don't know, I've tried it myself, it is not allowing, I don't know.
Several cases of that kind of things have come. So many invoices have been reported for the past months, and if I have to calculate interest for each and everything, I think that will be...
See, so if your GSTR 2A for April itself carries a reference, then it is not a problem, sir.
That's correct.
As I said.
We are very concerned with the...
But let me put it this way, sir. His GSTR 1 output, is it going to get incorporated in your GSTR 2A of April or August is something which has to be incorporated in the system. You understood, sir? He is filing it in GSTR 1 August as you say, okay? Yes. Putting the date of invoice as April.
Yes.
Let's assume that way.
Sir, you are filing return.
That is what I tried a few invoices, it did not allow. I was not able to upload.
I am speaking from the point of view of the recipient. So in my case, I am viewing GSTR 2A for the month of August, wherein lot of invoices pertaining to April, May are being reported. I have taken those ITCs in the respective months as soon as I have received the goods and the invoices. But now I see when I am just batching, I now see only, now these are reported in the month of August as May, April, etc. Then what is my position?
Sir, my sense is that if your GSTR 2A for August only reflects, the officer will simply say that you are eligible only from that month. You will not be eligible from the previous month onwards. That will be the simple view of the officer.
No, sir, he is correct. They will allow from April because the transaction took place in April and tax was also paid in April.
No. Tax was not paid in April.
Tax was not paid in April, sir.
Tax was not paid, then you are not.
That is what, sir. Tax is paid only in August. That's what I'm trying to say.
Tax was paid.
How the system is allowing by April month to be reported in August? How the system is allowing?
Sir, if it is a delayed reporting by the supplier, you are entitled to take the credit within 180 days of your payment, which is valid. 2 months it will allow. Third month if it is faulting, then it has to be popping up. If it is in August uploading, you will get, because the mismatch will not come. If you have done it in April, the same invoice number is matched in the August reporting. There is no issue for the recipient. That's the point of yours. No issue for you. Whether it is coming in August popping up or April popping to A, that doesn't matter for the recipient because he has done delayedly, it has been matched. The question is, 2 months time is given, more than that it comes or not. Initial this year it is not a problem. In the amended scenario, acceptance reason will take care. We have to not devote more time like this. Quick questions, we should deliberate few more such questions. I request each member to cooperate.
Sir, any idea when is the GSTR 9 or 9C, 9D is coming?
Parliament. அடுத்தது போப்பா பார்லிமெண்ட் தான் சொல்லுவான் அவ சொல்லுவாப்பா அதெல்லாம் கேட்காதப்பா இருக்கிறதே கேளு சுனில் நீ கேட்க ஆரம்பிச்சும் போதே சொல்லிட்டேன் நான் சாரி சுனில்.
Sir, just a general question. Interest is payable on the gross output liability or on the net?
That is a debatable point ma. One by because the money goes to the exchequer not by the credit mechanism. At the time of uploading only money is going to the consolidated fund. There are interpretations that till the time of the return is accepted as completed in the formalities, it is like entering the gate. Money goes to the consolidated fund only after the entire formality of the return getting completed. Till then, interest is applicable is the view. But logically, we may think it is there with the government electronic credit ledger or cash ledger. That is a debatable point.
Correct.
Correct?
And already notices are.
Reading of the section states that tax to be paid. It doesn't mention whether it is to be paid by way of credit or cash.
Debatable point. There are interpretations possible. The extreme view is only after the completion of the procedure, money goes to the consulate. Till then, I am entitled for the money, though the money is technically with them. That's a different point. That interpretation also going. But generally, the money is with you. Today, I am paying another 1,000 rupees. You should charge on the 1,000, not on the gross.
But I think both the views are there.
So that is the point. That's why I told you in one word, a debatable point. Thank you.
GST entities for the amount of 2 crores and more or 2 crores?
GST audit. GST audit. 2 crores.
Time limit?
December.
31st December.
இந்த மாதிரி டக் டக்குன்னு வேணும் ஒன் வேர்ட் ஆனா இந்த இன்ட்ரெஸ்ட் ஆஃப் பிகாஸ்
Actually, after the presentation of Mr. Subramanya, one thing is clear. படிச்சதெல்லாம் மறந்துடணும் போல. இப்படி பயமுறுத்துறாங்க police. Yes, yes. Sir, may I invite Jayalakshmi? Madam, she is a company secretary in practice. Friends, please join your hands for Madam Jayalakshmi to give a sum up, very quick sum up.
Good evening, everybody. I thank everyone for giving me this opportunity to speak here. The session was very good. I don't have words to say because I'm a practicing company secretary, I have come over here to learn something about GST. I know only basics of that. Today a lot of takeaway was there and knew this amendments, the return amendments, the negative liability. It's a new welcome to this thing. I thank you, sir. Thank you I have learned a lot today. Thank you very much.
Now may I invite Mr. Sunil Jain on the stage, please, to honor Mr. R. Subramaniam. And may I invite Dr. M. S. Shankar, please. CA Dr. M. S. Shankar on the stage to honor CA V.V. Sampath Kumar ji.
I have not done anything, I am not entitled except witnessing and learning along with you. But then, age gives at times. எதுவுமே சொல்லாத போகிறாங்க
It's not like that. Good evening, gentlemen. It's really a very pleasant show for me to learn a lot from GST. I simply opened the book of practice some 8 months back. So my learning part was very high when I attended this seminar. I'm really thankful for Mr. Raju for giving me the opportunity. In fact, until 2 o'clock today, there was absolutely no plan for me to come over here. It was only a very short notice I made an attempt, and I came here and I learnt a lot actually. There were more things to learn in the future because of the 2019 amendment, a bombshell, a big bomb, hydrogen bomb is being dropped. We may have to learn a lot. Thank you very much. Thanks for the opportunity.
And last but not the least, thanks to each and every one of you, because it's a very, very short notice. Today we have touched the mark of 84 registration, and it's all only because of you. Thank you one and all. We'll again meet on a similar, yet another topic on GST practice. Thank you.